and also our hosts. We are at their home. So please welcome her once again as she takes the microphone. You're very welcome, Madam Josephine.
See the teams that are represented here. Makerere University Business School. Please clap for them. Makerere University, main campus, groups A and B. Ndeje University. And Uganda Management Institute. So you're welcome. You're welcome to the CMA auditorium, or is it the Uganda Business Facilitation Center? It's a privilege for me to make opening remarks during this year's edition of the CFA Institute Research Challenge, and I would like to express my gratitude to the CFA Institute and the CFA Society of East Africa, please, for organizing these things. And I also want to pay gratitude to CRDB, Bank of Tanzania. I hear that they're online. Old Mutual Investment Group and other partners. Can we give our partners a round of applause? I would also like to acknowledge the invaluable contribution of the university administrators. I don't know if there are any present here who support and encourage their students to participate in the challenge, and we thank you very much for your support. And then lastly, I would like to acknowledge the judges and mentors in the house. Thank you for your dedication to nurturing the next generation of financial analysts. Your expertise, guidance, and feedback are invaluable to shaping these young minds and preparing them for the challenges ahead. The CFA Institute Research Challenge is it's very crucial in nurturing the next generation of financial professionals and experts in the capital markets space by equipping university students with skills in analysis, valuation, report writing, and presentation. And as you're all aware, the skills that we require in capital markets are very limited. And so one of the things, some of these initiatives that are taken is to try and grow that talent pool, so that once you have a vibrant capital market, you also need the appropriate skills to be able to drive that in the sector. To tap into the wider talent pool across the country, I urge the CFO Society to expand. There are only 4. There are many universities in Uganda. How can you encourage them to participate in this challenge? I think we have more than 10, probably 20 universities in this country. So I think next time I would like to see a lot more participation from across the country. I would allow me to mention that Capital Markets Authority is actively implementing the 10-year Capital Markets Development Plan, which is the blueprint designed to position Uganda's capital markets as a cornerstone for meeting the financing and investment needs of both issuers and investors. And a key component of this master plan is capacity building among young people in secondary schools and in the universities. So it's essential in fostering robust understanding of the industry and cultivating future leaders who will drive innovation and growth in the capital markets. The CFA Institute Research Challenge remains an invaluable platform in achieving these objectives, serving as a talent pipeline for skilled professionals in this field. Additionally, there is a growing demand for deeper and more comprehensive research on domestically listed companies, their financial performance, and actionable investment insights. While market intermediaries have made strides in sharing research reports with their clients, there's still room to enhance the rigor and accessibility of such analysis. I challenge investment professionals to focus on comprehensive analysis and provide well-formed recommendations that inspire confidence among investors. And as you know, one of the objectives of capital markets is investor protection. And we always say that an investor who is informed is an investor who's protected. So I think in that context, you need to appreciate the role that investment analysts do play in providing information to investors and therefore provide comfort that their investments are safe. So turning to our participants today, today's challenge is more than just a competition. It's an opportunity to hone your skills, think critically, and collaborate with peers who share your passion for finance. So as you live here today, I know you're from different universities. Each one of you should have made a friend from another university. That's how you start to grow your networks. And as you'll know, social networks are very important. So don't only come here to do the challenge, but also to increase your networks within your profession. So I challenge each one of you, by the end of the day, you should have met someone new. Yeah? We agree? Yes. So the case study before you is not just an academic exercise, but it's a microcosm of real-world challenges that we will face as future leaders in this industry. So as you delve into the intricacies of financial modeling, valuation, and investment recommendations, remember that your work has the potential to shape decisions that impact businesses, investors, and economies. So strive for excellence, but also remember the importance of ethics and integrity. Investment is a business of trust. Yeah? By the time someone invests or allows you to invest their money for you, they trust you. So the aspect of ethics and integrity cannot be overemphasized. So even in this challenge, do remember that. In a world where data is abundant, but trust is scarce, your ability to uphold the highest standard of professionalism will set you apart. In conclusion, I reaffirm CMA's commitment to supporting this research challenge and other similar initiatives that cultivate innovation, professionalism, and ethical practice in the financial sector. So let's continue to work together collectively towards realizing the full potential of Uganda's capital market. So thank you again, CFA Research Institute, for doing this. We appreciate, and we commit that we'll continue to support you in this journey. I thank you all for God and my country.
Thank you very much. Another round of applause as she takes her seat. Thank you very much, Madam Josephine, for those very brilliant words that you have shared with the team. At this moment, I would like to mention that we are going to have a virtual presentation from the subject company. Because they're in Tanzania, they will be broadcasted live, so we will just listen in as they make their speech. But before that, I would like to welcome Julie Akelo, our board member and also vice president for the CFA Society East Africa, to give us a presentation from the society, and then we will listen to the CRDB presentation. Julie, you're very welcome. As we put up her presentation, please help me welcome her to the podium.
Thank you very much, Ruth. Morning, everyone. It's good to see you all. My name is Juliet Akelo, and I'm a board member of the CFA Society of East Africa. I'd like to start off by welcoming our distinguished guests and hosts for the event. Madam Josephine, we're very grateful. Like she has already expressed for the CMA for the continued support through the years. Welcome the students to this competition. I'll briefly give us a presentation from the CFA Society of East Africa. I'll start off by mentioning our partners, as he puts on the slides. Our partners for today's events are CMA, the Capital Markets Authority. I'm not sure whether all of you people know what the CMA does, but like Madame Josephine has already said, it's the regulatory body for capital markets in Uganda. So because of them, our investors are safe as they invest within Uganda. There's also CRDB, which is a commercial bank, one of the leading commercial banks actually in Tanzania. It's one of our partners for today. We have Finaco Hub. Finaco Hub is based in Rwanda, and it's an innovative hub as well as a prep provider for CFA study materials. We also have the Kigali International Financial Center, and the International Financial Center is really what is fronting Kigali becoming a financial hub, and they do initiatives to that regard. Thank you so much. So we have Kigali International Financial Center, and finally Old Mutual. Old Mutual is another leading financial service provider based in Kenya, and they do so many things, including investments, insurance. So those are our partners, and we continue to be very grateful as a society. Sorry. So our subject company, like we already talked about, is the CRDB Bank. And I'm not going to say much about it because we have a presentation, like Ruth has already said, from the team in Tanzania coming up. Our judges for today, we have a very broad array of seasoned professionals within the industry. We are very grateful. It's completely a volunteer job. So we continue to be grateful to you, our judges, for taking off your time to mentor our next generation of financial professionals. So today within the team, we have Joe Muhumuza Kamara, who is a country manager of Zeno. We have Mr. Dixon Sembuya, who is the Director of Research and Market Development here within the CMA. We have Mr. George Jato Otim, who is also a board member within the CFA Society of East Africa. We have Madame Namirembe Eska, who is an asset manager with Gen Africa and as well a board member of the society. Finally, we have Mr. Stephen Opondo. He has joined us from Kenya, and we are very grateful for the effort that you've put in, and he's also part of the team today. And finally, myself, I am an asset manager within Bank of Uganda, and also a board member for the society. I will broadly speak about the rules for today, just so that we are aware. So as you come in, you're not allowed to disclose your university name. You should only use the team letter that is assigned to you. And each of you will have a letter that is assigned to you by the team. You're not allowed to use props or improper language or improper signals within the presentation. It's a completely formal presentation, and we expect that you act that way. And each member will be required to participate within the presentation. And I think when the judges are speaking about what they score, at some point you will realize that teamwork is among the factors that we look at. So that will be required of the teams. And then each team will be given up to 10 minutes. However, an additional 5 minutes will be provided. And this is strictly for the question and answer sessions that's provided by the judges. So we'll have a timekeeper who will remind the teams. Actually, they'll put up a placard when there are 5 minutes left, and later on when there's 1 minute left, to just remind the team of the time basically. We request that you keep time, because you'll also be marked accordingly. And obviously the timekeeper will then announce when your time is up, and the teams will be expected to stop the presentations then. So once the team has presented, we require that you don't mix with the people who haven't presented. so that you sort of advantage them or disadvantage them. So everyone will be outside, but once you're done presenting, you stay within the room and not go outside to mix with the people who have not yet presented. Is that okay? All right. So the first round will involve all the 7 teams, and you will be marked based on the, 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 the graded report that you presented, that you sent in to us, and that report will contribute 50%. And today's presentation will also contribute 50%. So that is for all of us, first 7 teams. Then after that, we shall progress to the best 4 teams that will come on and again make presentations. And this time round, you will entirely be graded based on your presentation, 100%. After that, we will choose the best 2 teams who will then face off with each other. And finally, we will determine the best team. For purposes of scoring, you will be marked by the judges based on your financial and industry analysis, how you do that, the valuation, the different valuations that you do for the subject company. We'll also look at things like environmental, social, and governance that you do for the subject company and you speak about. You'll be marked on your presentation style or presentation skill. There'll also be grading for your ability to answer the Q&A very well. And finally, like I spoke about, the team involvement is also going to be scored, and the quality of your materials. So that speaks to the quality of your slides, basically, and how you present it to the judges. And the teams that win, or the team that wins today, is going to go on and compete with, maybe to start off with this slide, to compete with other teams within the sub-Saharan Africa region where we lie. So you will be competing with the team from Ethiopia, the best team from Ethiopia, Ghana, Kenya, Mauritius, Nigeria, Rwanda, South Africa, and Tanzania, and Zimbabwe. And those will basically, we will pick the best, and the best 2 teams. And those will represent our sub-region, which is the Europe, Middle East, and Africa region. So the best from that region, that is the Europe, Middle East, and Africa sub-region, will then proceed to a global final where they will face off with other people from the Asia Pacific, the best from the Asia Pacific region and America sub-regions, basically representing the entire Europe and Europe, Middle East, and the Africa sub-regions. So we do wish you the best, and our confidence is in you guys. And this time round, we are also grateful to have industry mentors who are going to mentor the teams. We didn't have that last year, and we're very grateful for them volunteering within this year. So we hope that they'll spend more time and mentor our best teams so that they're able to do much better, especially in the regional and hopefully global competitions. Just in time for purposes of what is to come, today we have our local in-country final competition. Then we'll have a month, that is 8th to 9th April, for the regional semi-final competition for the team that will have qualified. And finally, the regional competition within April. And if we have winners, they'll proceed to compete globally on 5th May. Thank you so much, and may the best team win.
and that you actually start pursuing your CFA exams. And should you choose to do that, I would like to inform you that us as a DSC, we are partnered with CFA,
So
and we actually have an agreement with the CFA Institute
presentation
that we,
from CRDB, so we'll just listen.
through the DSC, you can do
make
your
the
review, your
presentation.
preparation for the exams, but you can also sit for the exams here. So please do feel welcome. I do not really want to take too much of your time, but I want to also take a brief moment to congratulate our host today, CRDB, for an impressive performance in 2024. And I was just talking to the CEO, and I was telling him that I trust that this year we'll hit the 1 trillion profit before tax mark. I had noticed that actually one of our qualified CFAs is in the room. Congratulations, Amari. Most recent qualified in Tanzania, I believe. There hasn't been a new one, has it? And I trust that there'll be many more coming. So I know you have a lot more members, people that you need to mentor to get them to be qualified as CFAs. So last but not least, as has been stated,
teams from the sub-Saharan region. So I'll show you that later in the presentation. After that, you'll proceed to the regional final, and after that, you'll proceed to the global final.
Back to all participants, and I hope in a few months' time, we'll be congratulating you on winning the EMEA challenge. Having said that, once again, thanks to Chief Mkama for being here. Your presence here shows that us as capital markets, we are serious about nurturing the talent, appreciating the qualified talent that will help us grow the market. And thank you, Abdul Majid and the team, for sponsoring, for being a partner, and for hosting us today. Wish you a good morning, everyone.
Thank you so much, Mr. Peter from DSC. Once again, a round of applause to him. I hope all of us, we have heard all the fundamentals issues that he have just said here. And without further ado, I would like also to welcome Mr. Nicodemus Mkama from CMSA for a brief remarks. A round of applause to him. Nice.
Abdul Majid Nsekela, Group Managing Director, CRDB Bank PLC, Mr. Peter Nalitolela, Chief Executive Officer of the Dar es Salaam Stock Exchange, Lucy from the CFA Society East Africa, Tanzania chapter, board members of the CFA Society East Africa who are present here, esteemed judges, faculty advisors, the participating teams, and industry professionals who are here. Na wasalimu kwa jina la Jamhuri ya Muungano wa Tanzania. Jamani, leo ni siku ya furaha, lazima tuonyeshe energy na passion. Na wasalimu kwa jina la Jamhuri ya Muungano wa Tanzania. Kweli naona kazi inaendelea. Ulipo? Tupo? Oh, that's great. Let's clap hands for CRDB. Na mimi naungana na wenzangu ambao wametangulia kumshukuru Mwenyezi Mungu kwa kuweza kutujalia afya njema na kuweza kujumuika hapa. Tuna kila sababu ya kumshukuru Mwenyezi Mungu. Lakini vile vile, in a very special way, napenda kumshukuru mwenyeji wetu na main sponsor wa hii event, group CEO wa CRDB, ndugu yetu Abdul Majid Nsekela. Kwanza ninashukuru for the compliment that you have done to CMSA as well as DSE. We really appreciate for the compliments, but these compliments are a result of the good relationship that we are getting from the key stakeholders, including CRDB. And let me say, in a very transparent way, CRDB is one of the key active participants in the capital market, and they are doing great jobs. It's an open secret that CRDB has 4 licenses from Capital Market and Securities Authority. One is a custodian bank, and is the bank that is holding custodianship for the major corrective investment schemes in Tanzania. So the performance of the corrective investment schemes that we are seeing in the markets under the custodianship of the CRDB Bank. So a round of applause for CRDB. But again, CRDB has investment advisory license from the CMSA. Again, most recently, CRDB has received a license from the CMSA to run a full-fledged brokerage firm in Tanzania. Kwa hiyo sikuishangaa sana nilivyomsikia ndugu yangu Abdul Majid Nsekela akisema the top 5, you have the job. Indeed, you have the job. Leo sio siku ya speech, lakini ni vyema sana some of the salient features ambazo really they are notable in CRDB. And they have been a catalyst on the performance of our market. I've just come from the East African meeting from our counterparts in the region. Kenya, Uganda, Rwanda, Burundi, and other members within the region. And indeed, even some few weeks ago, we had a meeting for SADC capital market regulators in the SADC region. People were wondering, other markets are having a dry up of instruments. But in Tanzania, we are having quite a number of instruments coming to the market. And some of them, and most of them, are coming from CRDB. So I think that's a very good thing. We have done the first green bond with big ticket size in sub-Saharan Africa, which was oversubscribed. But we have done most recently Samia Infrastructure Bond, which is part of the branded finance. And I think these are instruments that we expect CFAs will be coming to the market to be designing these kind of thematic capital market products. So we really congratulate CRDB, but also we really congratulate all the capital market professionals, and we inspire and encourage the team that we have a lot of work ahead. So as you prepare for the challenge, but I think you should not be short-sighted about the challenge. You should be looking on the transformative, inspiring work ahead of us. Kwa hiyo ninawashukuruni sana nina wa encourage sana vyuo vyote ambao mmehudhuria hapa, University of Dar es Salaam, University of Dodoma, Ardhi University, kwa kuweza kutengeneza hizi timu ambazo zitatuwakilisha, na I'm quite happy and we are looking forward to see that you are going to represent Tanzania as a country and emerge as top winners in the East Africa competition. Ninapenda kuhitimisha kwa ku recognize the outstanding talent and potentials among the participants. The CMSA, as a regulator for the capital market, is committed to support this initiative. We have the MOU with CFA East Africa, so would like to encourage you to continue working with us, together with the other key stakeholders. And we'll keep our doors open for the participants who may wish to undertake a study visit. The group CEO has committed to take the top 5. As CMSA, we are committing ourselves that we'll provide a study visit that is going to be comprehensive, understanding the market. Normally we have this kind of study visit program, not only in Tanzania, but also outside the country. And I'm sure some of you will be participating in the capital market, universities and the higher learning institutions challenge. And this is a competition among universities. And normally the top 5, the top 6 normally will get hands-on experience within the intermediaries. They'll come to CMSA, Dar es Salaam Stock Exchange, but also some selected listed companies, including CRDB and NMB and others, selected ones, but also you'll have an opportunity visiting the largest fund management and brokerage firms. So that will provide an opportunity for you to have hands-on experience on how professionals structure products that are coming to the market. So those of you, Group CEO, before they become employed, they'll have an opportunity ya kupikwa kama wataalamu waliobobea sasa, wakiwa wamepita kwenye hilo tanuru la kuona hands-on experience ya regulator anafanya nini, stock exchange anafanya nini, na intermediaries wanafanya nini. Unapowapatia dawati CRDB, they know where to knock the doors. Kwa hiyo you have that opportunity. Baada ya kusema hayo, ninawatakia kila la heri all the participating teams, the best of luck. Asanteni, nawatakia ushindi mwema. Asante sana.
Makofi kwa
Right, thank you very much for your attention. This brings us to the close of our first half. We'll now break for breakfast and then come back, and then we'll give you the next instructions before we start our very first presentations. Breakfast is served. Hello, may I please have your attention? We have about 5 minutes before we can start. So I would request that we wind up with the breakfast because we'll be ushering the teams out of the room and then call in the presentation. So kindly wind up in about 15 minutes so that we can, 5 minutes, and then we can start. Thank you. May I have your attention once again? Thank you. So now it's about time for us to step out of the room. I just want to highlight a few housekeeping rules, especially for the participating teams. And I know this was already communicated, but just to mention it once again, that during the presentation sessions, all the teams will be ushered out. But after your presentation, you're free to stay in the room. So before, all the teams will be ushered out. You'll use that door through the washroom lobby area, and then there's a waiting space out there. And then you'll be ushered in, one team at a time. Stella has already allocated each of you an anonymous number, an anonymous letter to identify your teams. So you're not allowed to introduce yourselves as a team representing a certain university, just to avoid any form of bias or preferences. So you'll introduce yourselves as Team A and then go on with your presentation. At the end of your presentation, the judges will be given an opportunity to ask you questions. Also, watch out for the timekeeper, who will be seated around here. Edgar, where are you? He's right here. Watch out for the timekeeper. He will show placards indicating 5 minutes to indicate your time. You have 10 minutes of presentation time spread through the team members. You'll be shown 5 minutes, that is a half-time mark, and 1 minute, indicating 1 minute left and time up. So also the request is to the judges to make a decision here if they would like a team to proceed if they have exceeded the 10 minutes, and then deduct marks upon an extra minute exceeded, or you would like us to interrupt the team and stop them instantly. So this goes to the judges. You can let us know what you feel about that before we can proceed. No.
Hello? Hello? Is it working?
Judges, we're waiting for your decision. All right, so the judges have decided. Once your time is up, we'll interrupt you and stop you instantly. Thank you. Any questions before we proceed? All right, okay.
Thank you very much. Mine is a quick one. Are we allowed to come with some notebook when presenting? Oh yeah, to keep it out still.
Yes, you're allowed to come with a notebook if it has your reading notes, but you'll also have access to this screen. So the presenters will be here, around here. So I think you'll have visibility of your PowerPoint. You'll be given a clicker to control your slides, and then the judges will use the screen to view your presentation. So if you have any reading notes, you can come with them. Yes.
You talked about a clicker. Is the person presenting going to hold it, or someone's going to hold it for him or her of the presentation?
Okay. So in the team, I believe you have practiced how you're going to run your slides. Within the team member, one person is going to have control within the team. So you'll decide who will have is it the presenter who will be clicking, or another member of the team running the slides? So it's just like you would decide with a normal laptop who manages the slides and who speaks. Is it the same person or a different person? It's a team decision. Any other question? Okay, thank you. I think we don't have any further questions. I would like to request all team participants to step out of the room and follow Stella to the other side. Faculty advisors, industry mentors, and graders are free to stay in the room, but you're also free to follow your team if you so wish. Thank you very much.
that there is promising expansion in the profit. CRDB Bank has a target price of 726.2 Tanzanian shillings with a closing price of 660 Tanzanian shillings, giving us an upside of 10.03%. Hence, our recommendation for buying shares in this company.
So about CRDB Bank, it was established in 1996 and operates subsidiaries in various countries like Burundi and Congo. It has about 32,395 shareholders, 4 million customers, assets worth 13.3 trillion Tanzanian shillings, and over 3,000 staff. It has various activities like the retail banking, the corporate and institutional banking, Islamic banking, treasury and capital markets, and delivers these services through various branches countrywide, mobile agents, and SIM banking, and many more.
So this bank is part of the banking industry in Tanzania, which is dominated by commercial banks. And in this total industry, their assets have increased by a percentage of 17.4% in 2023, reaching a figure of about 54 billion Tanzania shillings. We also analyzed the industry's competition using Porter's 5 forces model. We noticed that there is high competition among the banks due to a large number of the banks like NMB, PLC, Absa Bank. We also realized that there was a high threat of substitutes. High bargaining power of consumers, moderate bargaining power of suppliers, and also a low threat of new entrants into the industry because of a lot of strict compliances like the legal compliances.
Now we look at the business growth, and we have the total assets increasing. We've realized that the assets have been growing steadily from 6 billions to 13 billions in 2023, and we predict a strong performance in the asset increase to 18 million, and that would be a good return on the assets of the investors. We also expect the shareholders' funds to increase from the shareholders' funds to increase to 2.8 billions. Now look at the shareholders. We look at the shareholders' value, where we have the earnings per share and the dividends per share. So when you look at it, there is a strong difference, and it means that the bank is ready to invest some of its earned profits. Then we look at the earnings and peer comparison. See that CRDB Bank performed above the industrial average with a 2.6, and according to its peers, it performed very well. I will look at the return on assets, and in 2023, it had a 4.8, and looking at the industrial average, it outperformed, and it was only second in the company. Then look at the cost to income ratio, where banks try to save costs, and CRDB Bank performed somehow well. Lastly, look at the profitability, and CRDB Bank performed so well next to the main competitor. With all those ratios, we recommend a buy recommendation.
Ladies and gentlemen, a comprehensive analysis of CRDB's valuation employed basically 3 distinct models, and this helped us to have an estimate of the value of CRDB. So firstly, we employed the capital asset pricing model, and in this model, we had basically 3 inputs. We had the risk-free rate, we had the cost of equity, we had equity risk premium, we also had the beta, and inputting all these figures in the capital asset pricing model, we arrived at a price of 771.73. Now the excess return model helped us to arrive at a price of 787. And in this, we first of all had to identify the cost of equity, followed by the present value of excess returns for the anticipated period ranging from 2024 to 2028. Delving into a relative valuation model, ladies and gentlemen, it compared CRDB's value to the value of other peers in the same industry in which it operates. And under this valuation model, we singled out two metrics. The first, which is the price to earnings ratio, and then the price to book value. And the prices that were derived from both metrics, we got an average, which we also took as our share price, which is 621. So inputting, and lastly, we're able to get the average of the three prices that were derived from all the three models, and then we reached at a price of 726.90, which also doubled as our 12-month target. Thank you.
We also analyzed the company's environmental, social, and governance factors. Starting off with the environmental factors, there was the Chijani bond, which has been the largest in the sub-Saharan region, whereby 780 billion Tanzania shillings has been borrowed from the public to fund climate resilient projects. We also looked at the Green Climate Fund accreditation, whereby CRDB has been the first commercial bank in Tanzania to be approved by this GCF, whereby the resources have been used to fund 3 financial businesses in the local agriculture sector. We also looked at recycling and waste management, whereby the company has partnered with the recycler, a company looking to reduce the waste stream in Tanzania. And in 2023, about 10,000 kilograms of paper have been recycled. We also looked at tree planting and paperless banking to engage with the environmental sector through campaigns such as the Tendezesha campaign. There was also a lot of employee engagement and inclusion through activities like health and training. And also, we looked at inclusion within the company, whereby in 2023, there was a male to female ratio of 56 to 44. However, there's a target in 2027 to reach 50 to 50 male to female ratio. There's also been a lot of youth and women empowerment through programs such as the Mbeju campaign and the Malkia accounts to encourage and support entrepreneurial women and youth in the country. There's also been strong governance in this country, whereby there's also been a strong governance, whereby through the experienced board of governors and through their committees like the audit and risk management committees, they have managed to improve the value of the company.
Ladies and gentlemen, in this dynamic financial environment, risk management is very crucial to maintain sustainability and growth of any business. And CRDB has established a robust risk management framework to manage these uncertainties. For example, when we talk of the operational risks, most of the activities or the transactions of CRDB Bank are now going digital. So this minimizes the human errors and as well as the customer engagement. Now, when it comes to the credit risk, CRDB has established various methods to ensure that it minimizes these risks. For example, it employs the early warning signal models to detect possibilities of failure to pay. And also, the bank has employed expected credit loss. Now, this one helps the bank to cater for unforeseen default in payments by the customers. When it comes to liquidity, we analyzed that CRDB Bank has maintained a liquidity ratio of 27%, which is below the industrial average of 20%, which shows a strong liquidity. And it has managed this through doing what we call stress testing, where liquidity testing are done to ensure preparedness for liquidity risks. When it comes to compliance risks, we said there is early warning signal models. So when we analyzed using this risk matrix, you can see that the operational risk, when it comes to with our axis, this one represents the frequency of the risk, And this one represents the magnitude of the risk, and the matrix can explain that operational risk, because this is a business, are most likely to occur.
So, in conclusion, we issue a buy recommendation for CRDB Bank. Thank you for listening to us.
Thank you for the presentation. My question relates around the ESG. Maybe you could perhaps expound more on the governance. I don't think the presentation quite covered that well. What could you say about CRDB's efforts towards ensuring that it's a well-governed entity?
Thank you very much. So the CRDB Managing Director is Mr. Abdul Majid Nsekela, and they have a broad number of committees, like the Risk Management Committee, the Audit Committee, and these people have key roles and responsibilities. Each person is assigned to a specific committee. So through their annual meetings, through their cooperation, they manage to increase the value for the committee because they're experienced. So through this, they have managed to comply with the regulations, as well as reduce the risk for the company and create a good image and reputation. Thank you.
Can I? Yeah, thank you. Thank you for that presentation. I think I must admit I appreciate the way you've done the industry comparisons. I think you've looked at various matrices, and you look at the peers. I think that was a good way of bringing up the picture with respect to where CRDB stands within the banking sector. Now, my question is on the valuation, the models. I felt like your valuation models were not very clear. Just go back.
Pardon?
I felt that your valuation models were not very clear. Okay.
Okay.
Apart from the relative valuation summary, okay, you talk about CAPM, okay. Now, CAPM is not a valuation method, okay. CAPM is used to determine your cost of equity, okay. And once you have your cost of equity, or you have a discount rate, you can then plug the same into a dividend discount model, a free cash flow model, etc. Okay, so I got a bit confused there when you talk about CAPM being one of the valuation methodologies, while to me CAPM is just a way of establishing your cost of equity or cost of capital. Maybe you could explain a little bit again on the excess return, because to me, again, these are ways of determining the discount rate, okay, rather than the models, okay. These discount rates are then plugged into a model such as, the Gordon growth model, any other dividend discount model, a free cash flow model, etc. Yeah.
Like, we executed the excess return model. First of all, we had to identify our cost of equity, and then we also had to identify the discount rate, which we had it as 21.35%. So we use this discount rate to be able to determine the present value of the excess returns that we had projected for periods ranging from 2024 to 2028. And then by getting that total, we added it to our total equity invested. And then we got the total value of equity, and then dividing it with the number of shares, we arrived at that price, our share price, at 787.18.
Okay, maybe you could also educate me a bit. When you talk about the excess return model or summary, you could just educate me a little bit on it. But I think my point is that these are just ways of determining the cost of capital, okay? Or your required rate of return, okay? So once you have an RRR, or required rate of return, you then plug the same into different other models. Okay. So I think you should have indicated those models.
Okay.
That, you know, we did either a dividend discount model, etc. I think that's my point.
Okay, thank you.
For clarity.
Thank you.
Team B, good afternoon.
Good
Or it's
afternoon.
still morning. Good morning. So my question is more towards the risk. What do you have to say about the operational risk? Run me through it kindly.
For operational risks,
Yeah.
I say that because operational risks, they arise as we are conducting these activities. So I say that for CRDB Bank to manage these operational risks, it has automated most of its transaction. So by doing so, automating this transaction, it means that it is minimizing human errors. Obviously, they can't be removed totally, but it minimizes. And also when it comes to customer engagement and accessibility, they can easily access because there are so many ways they can access. For example, the SIM banking, the internet banking. So that is it. Thank you.
Okay, so on that point, I was trying to figure out whether you're looking at both sides to it.
Yes.
Because as much as you're looking at towards the positive side that they are
Yes.
going digital and all,
Yes.
going digital has its own cons like the cybersecurity threats
Yes.
and all that, which I
Yes.
expected you to highlight.
So-
Because there is the hacks which would happen. What would you like to add on that?
Yeah, so thank you. You've talked about the cyber security. Now, the CRDB Bank does what we call real-time monitoring. So by doing real-time monitoring, it is able to see this transaction and also to comply with these data protection risks. These data protection risks associated with data system failures, data manipulation, something.
Okay, so for that, basically what you're trying to put out is the ISO 27000 and the ISO 27001. These are various certifications showing that you have covered your cyber security threats in a company. So that's the easier way to curb the operational risk and cyber security threats. Otherwise, it's okay. Yeah. So.
Sorry, I meant to take you back to the valuation. I'm not yet convinced.
It's okay.
Why did you pick particular valuation methodologies to value the company?
Okay, for the capital asset pricing, it is relatively simple to understand based on the.
I think Dixon has clarified that CAPM is not a valuation methodology.
Okay.
And that's why I'm a bit confused. Your cost of equity on your CAPM summary is 18.73. When you come down to your excess return summary, it now becomes 21.35. What changed? What's the difference? I'm trying to understand what's going on there.
To be able to arrive at the cost equity of 18.73, we used a method that adds the risk-free rate, and then we multiply our beta times the risk premium to be able to arrive at 18.73% there. And then under here,
I think it's okay. You will maybe figure out what's happening there, because I would assume that if your cost of equity has already been determined up there, then it would be the same cost of equity all throughout the method. Oh, okay. Like if you use another method and you need cost of equity, you'd use the same cost of equity on the second method. I'm also not convinced. I know you explained it on the excess return. I think I'm seeing it for the first time. Yeah. The relative valuation methodology I've seen enough times before, so it's fine. Now, when you get to the target, yeah, how did you weight? Did you just get an average of the three?
Yes.
You just got an average of the three. Okay. Thanks.
Can I add on valuation, please?
All right.
For the excess return, we looked at some of the prevailing conditions. Like for the CAPAM, okay, we estimated and got the cost of equity as the valuation says, but then we used those to use the valuation, the dividend valuation model, whereby we got our expected net profit, then we subtracted the equity cost, and then we projected, and we got the present values. Being our end year was 2028, so we added those present values, then we subtracted the equity, and we divided by the number of shares the company has, then we got that value. Then for the CAPAM, it's a model to get what the cost of equity. Then we first got the implied book value. Then we got the implied price to book value, then the price to share value. So then after that, they're giving us some values. Then we found the average of the implied book value and the implied share value we added, and it gave us that 771.73. That's how we got the value of the CAPAM.
Thank you. I think from your explanation of the excess return evaluation technique, they're trying to refer to the excess earnings. So that's what I did use from his explanation. But I think, unless maybe the rest of the judges have any questions, but I think that's okay. Thank you very much, Team B.
Welcome.
Yeah.
Good morning, ladies and gentlemen. My name is Rose, together with Paul, Modern, Irene, and Arnold. We are Team C, and we are your analysts for CRDB Bank today. We are here to unveil our analysis that gave us a buy recommendation for CRDB Bank. We initiate a buy recommendation, a buy rating for CRDB with a one-year target price of 775.99 Tanzania shillings, representing an upside of 19.38%. We want you to strike the iron when it is hot. Here is a snippet of our CRDB Bank. In 1996, CRDB Bank was incorporated in Tanzania under the Companies Act. In 2002, it was the first bank to issue debit cards in Tanzania. In 2009, it was listed on the DSE. In 2012, it was further extended to Burundi. In 2013, it was to issue agency banking. In 2016, it was the first bank to receive credit rating. In 2021, it participated in the UN Green Climate Change. And lastly, it was launched in DRC in 2023. CRDB Bank has an increasing share price of 41.30%. Since our valuation date, the price has increased by 3.08%, reaching 670.00 Tanzania shillings as of January 24th, 2025. CRDB Bank has several business lines. That is to say, CRDB Bank Burundi and CRDB Bank Insurance Brokers Limited. CRDB Bank has over 226 branches, 690 ATMs, and 9 mobile branches. Modern, come and take us through the industrial and market overview.
Thank you so much, Rose. In our industry and market overview, we were able to look at Tanzania with its major macroeconomic indicators, considering inflation, population, GDP, as well as the currency. Looking at population, Tanzania is the most populous country in East Africa with a population of 67.44 million people. Now, like you can see in our graph, the green color represents Tanzania. The GDP economy of Tanzania has grown at a rate of 5.6%. There is stable inflation. Tanzania has had a stable inflation of around 3.8%, and we projected this to remain stable at around 3.24%, of course, because of the favorable policies. The Tanzanian shilling appreciated at 8% year over year, and it is currently at 2,300 Tanzanian shillings against the US dollar. So we were also able to look at the competitive positioning of CRDB Bank, of course, considering its competitors using the Michael Porter's 5 forces analysis. Ladies and gentlemen, we used Michael Porter's 5 forces analysis on a scale of 0 to 5, considering the threat of new entrants, the bargaining power of suppliers, the bargaining power of buyers, as well as, the threat of new entrants, the bargaining power of suppliers, the bargaining power of buyers, like you can see on our slide. Ladies and gentlemen, Eileen will take us through the investment analysis. Thank you very much.
Thank you, Modern. Our buying rate was supported by 3 key drivers, one being the strong revenue growth and profitability. This was driven by the net interest income and the expanding loan book. CRDB's loan book has tripled from Tanzanian shillings 3.93 trillion in 2020 to Tanzanian shillings 8.44 trillion as of 2023 due to the strong credit demand. We also saw that CRDB's net interest income grew by 27.09%. Our second point is a significant growth in deposits and liquidity positions. At a 4-year average rate, CRDB's deposits grew at 14.56% due to the increasing trust that the citizens have in CRDB Bank. We also saw that the increasing deposits supported its liquidity position, hence being able to fund its loan portfolio. We also saw the robust investment portfolio with diversified assets. CRDB has quite a number of investment portfolio that include, we have the government securities, debt instruments, and these have been able to reduce the risk exposure. We also saw that CRDB has its total asset value of 2.9 trillion as of 2023. Let me call upon Paul to take us through ESG.
So under the environment, social and governance of the CRDB, we see that under environment, it has been able to recycle waste while partnering with the recycler company, advocating for SDG 12. And then it has also been able to create climate awareness and tree planting through the Pendezesha Tanzania campaign that has helped to promote SDG 13 for climate action. It has also been able to partner with the Green Climate Fund and secured over 225 million, which has supported sustainable farming. For social responsibility, we see that CRDB has been able to increase its customer base to 4 million and been able to integrate women and youth in its financial system. And it has also been able to empower education through the Kenti Jifunze program, reaching out to over 5,000 plus students. And then it has also been able to raise funds through the CRDB Marathon for the health facilities that has helped improve the health of the people of Tanzania. Then under governance, we see that the CRDB board has combined experience of over 200 years. that this has helped it to make strategic decisions under the management of the board chairman, Dr. Ali Hussein, and the CEO and managing director, Abdul Majid Nsekera. Then they have also been able to be transparent and accountable to its shareholders and the public through SDG 16. We see that under their employment ratio, gender ratio, we see that apparently they're running at a 56 to 44, male to female, and they're looking forward to having a 50-50 gender ratio by 2027. Let me invite Arnaud to take us through the financial analysis.
Yeah, under financial analysis, we assessed the financial performance of CRDB and we looked at its profitability, liquidity, and asset quality. Under profitability, we looked at a profit growth whereby its net interest income grew at a rate of 17.63% and profit after tax grew at a rate of 20.31, which means that CRDB Bank handles its interest rates and loan portfolio very effectively. Also, we looked at two important metrics that show how efficiently the bank uses its asset to make profits, whereby we looked at return on asset that grew at a rate of 3.17% and return on equity at a rate of 24.33%. We also looked at liquidity, how easy the bank can access cash in case it needs to sort out short debts. It has a resilient and strong liquidity, whereby its cash and balances with the central bank increased to 1 trillion from 2018 to 2023 from 700 billion. Also, the robust cash flows are an increase of 388.31% from its operation. That was the very, very good increase in percentage in 2023. Also, under asset quality, CRDB's total assets grew from 6 trillion in 2018 to 13 trillion in 2023. And they are looking forward to having its assets reach 17 trillion in 2024. Let me have Modern to take us through evaluation.
Thank you so much, Arnold. We were able to conduct a rich evaluation of CRDB Bank using 3 models. That is to say CAPEM at a weight of 30%, excess return mode at a weight of 50%, as well as relative valuation at a rate of 20%. Using CAPEM, we were able to incorporate the risk-free rate, equity risk premium, as well as beta, and this helped us to calculate our cost of equity of 12.74%. And with this cost of equity, we were able to calculate a target price of 744.09 Tanzanian shillings, representing an upside of 14.47% from the target price. We went ahead to use excess return model. Thank you. With the excess return model, we were able to calculate the earnings beyond the cost of equity, of course, putting CRDB Bank into 2 growth phases. Ladies and gentlemen, we anticipate that CRDB Bank will have a high growth phase from 2024-2028 and a stable growth phase from 2029 onwards. Of course, we were able to look at the key metrics like the projected return on equity growth, as well as the retention level. We anticipate that there will be a high retention level in the high growth phase because obviously CRDB Bank will be retaining high in order to reinvest in the stable growth phase. And with this, we were able to come up with a target price of 695.51 per share, representing an upside of 7% from the target price. And lastly, we also used the relative valuation. This is where we analyze CRDB Bank's peers in Kenya, Uganda, Rwanda, and Tanzania. Like you can see them on the slide. Here we considered key multiples like the price to earnings ratio and price to book value, and we were able to come up with a target price of 634, representing a minimal downside of 2.34%. Irene will take us through the last
We
part.
were able to realize that, like any of the profitable ventures, CRDB has quite a number of risks. We have the credit risk, operational risk, market risk, liquidity risk, as well as the compliance risk, but it's mainly affected by the credit risk. Ladies and gentlemen, once again, we emphasize a buying rating of CRDB Bank with a 1-year target price of Tanzanian shillings 775.99, representing an upside of 19.38% due to our strong key drivers. Buy CRDB Bank, strike while the iron's hot. Thank you.
We will now take the questions.
Thank you. Yeah. Yep. Thank you so much. I think you've clearly highlighted your investment thesis, brought it out. I mean, it has really stood out that these are the reasons as to why we believe that any investor should invest in CRDB Bank. But my question is around valuation. If we go back to your valuation models, CAPEM, I'm looking at cost of equity to the tune of 12.74%. That is very low. And I'm also looking at the risk-free rate that you used. You used the risk-free rate on a 1-year Tanzanian government treasury bill yield, 1-year TB. And I think there is a problem, okay, with that particular approach. And I'll tell you what the problem is. Usually when you're doing a financial model, you project outwards, or you make forecasts. It could be 5-year forecast. Usually the standard is about 5 years. Because, I mean, if you go longer, 10 years, there's a lot of uncertainty. Okay, so usually 5 years is good enough. And so what you do is that for the risk-free instrument, you try and match the forecast period to an instrument, a benchmark instrument. Okay, so if I'm forecasting for 5 years, I'll probably need to use a risk-free rate for a 5-year instrument. Okay, so
or even
when you use a 1-year instrument, and I suspect you've probably forecasted outwards for about 5 years or so, then you cause a lot of distortion. Okay, because ideally the yield curve should be upward sloping, indicating that, I mean, if you invest long term, you earn a lot higher because of the risk involved in investing long term. So that to me was a major error or a major blunder, which of course distorted your cost of equity. But again, I'd also ask the same question I asked the previous group. Which are the models that you used, okay? Because this is just a cost of equity, okay? Or a discount rate or a required rate of return, whatever you want to call it. So once you have that discount rate, which model then did you go ahead and deploy it into? I mean, did you use a dividend discount model? Did you use a free cash flow model, a discounted free cash flow model, etc.? Okay, because this is not the model that you used. Okay, you just used these to establish the cost of equity. Okay, so you could just elaborate a bit on that.
Okay, thank you so much. Like you said, that is so correct. We used this CAPM to get the cost of equity. But thereafter, like you can see in our metrics, we were able to use the dividend discount model, like you said, which helped us to get the target price of that 744.09. Yeah, we acknowledge an error. We were not able to put it on our slide, but that is really what we use.
Okay. So where is the mention of the dividend discount model? Or it's not there. Okay. Okay.
You want to go? So, yes,
Team
yeah.
C. For me, it was a good presentation. I love the display. I love the teamwork. I love the projections, the way you've done it. Otherwise, I'd like just to congratulate you guys for trying. Yeah.
Thank you for the presentation. I may have missed it as you were going through your presentation because you were fast. How does CRDB compare to its peers in Tanzania?
Thank you so much. Comparing CRDB to its competitors, we were able to use the Michael Porter's 5 forces of analysis model. Of course, now comparing CRDB to its competitors on, of course, considering the threat of new entrants, and we were able to see that it is moderate because there are, of course, a number of barriers that stop the new entrants from coming in. But we are also able to notice that fintech organizations make it easy for other organizations to come in. And secondly, we're also able to look at the bargaining power of the buyers. We notice that the customers have a number of banks they can actually access within the region, putting CRDB at a disadvantage. But it was able, of course, to overcome that. And we also looked at, lastly, the bargaining power of suppliers. We noticed that CRDB has a number of sources where it can actually source the technology and a number of resources that it can use in its sector. Thank you very much.
I think what I wanted to hear was how large is the banking industry in terms of assets, or you can use any other metric. How large is the banking industry in Tanzania, and what is CRDP's position in the banking industry in Tanzania? Is it the largest in assets? Is it the second largest? How does it compare when you're looking at cost to income ratio in comparison to its peers? How does it compare when you're looking at non-performing loans in comparison to its peers and the industry? That's kind of what I wanted to see. Do you have something like that, or have you looked at CRDB in that perspective?
Thank you very much. We had a slide on the banking sector. If you can check in the industry and market overview, CRDB is one of the biggest banks in the region, and in Tanzania, its major competitor, it's just NMB. In terms of its non-performing loans, CRDB has been able, of course, to mitigate. That's the slide I was talking about, the banking sector. Looking at its net profit, the total net profit of the banking sector from 2022 and 2023, you can actually see that Tanzania's banking sector is performing. And when you look at CRDB and NMB, they are the major contributors of Tanzania's banking sector. And of course, CRDB being one of the biggest, if not the biggest in Tanzania, it is always competing with NMB, and that is what we were actually able to notice in our analysis. Thank you.
Thank you so much for your well done presentation. Mine is also, she rightfully talked about the market share. It would be nice to know the percentage of the market share going forward in the next phase if you go through. My question is your opinion on the outlook of CRDB going forward, especially regarding to its adoption of new technologies and fintech going forward, basically. What's your opinion? Do you feel like they're well positioned going forward in the adoption of new technologies? Are they lagging behind? Just a comment on that would be good.
Okay, thank you so much. My fellow Rose talked about the milestone that CRDB has been going through ever since it started up to now. We noticed that CRDB has been actually bringing in new technologies, that is to say digital banking, and we anticipate that within 5 years, 3 years period, CRDB will be at the top notch in the region. And of course, looking at our projection, looking at the share price, that's a milestone that I was talking about. Looking at our projection, we actually see that CRDB bringing in new technologies. We hope it to reach our target price, and it will be one of the biggest in Africa after onboarding those technologies. Thank you so much.
I think in addition to that, if you are to check through under social, CRDB is really making sure that it reaches to the ground. If you if I can take you back maybe to microfinance, the history of it. So it's almost, CRDB is trying to make sure it inputs that microfinance part of it. That's why it is reaching to the lower people down. As you can see in our pictures there, that's a lady. Deep down, she's not maybe positioned. I have a feeling that she's not positioned maybe in town, in Dar es Salaam, but she's down where she's looking after her farm. So that's how, which means CRDB is creating influence among the Lulo people. So which means if a person is not able to access a phone, maybe to be taken out by fintech, such kind of M-Pesa, such kind of competition, which CRDB is in position to make sure it meets the desire and the will of the Lulo people in Tanzania. Thank you so much.
Sorry, I think I may have also a few comments to make. I think of the groups that are presented here today, I appreciate the fact that you have, probably in your presentation, you've shown that you have a good understanding of how a bank operates in terms of assets, loans, and also I think you have a very vague picture of, but which is a good thing, of what an investor would be interested in. And for the time that I've actually been a judge, I've not come across, I think, a team that has actually labored to show how a listed entity has performed against an index. So I was quite impressed with that in your presentation. Then the economic outlook as well, I think that was also well covered. So that's good. And maybe to help the ones who have already presented, if you're talking, good enough, this is a company that's in East Africa, right? So when you're trying to invest, you need to convince yourself, why should you take your money, first of all, outside your own country into another country, right? So that's why you do an economic overview. Is that economy performing probably better than ours? Then when you get in there, why are you investing in the banking sector instead of any other sector? Yeah. And once you identify a company within the banking sector, just like what my colleague was mentioning, how is it performing against its peers? That's what she's looking at, right? So in terms of assets, in terms of loans, in terms of non-performing loans, because you want to get the best opportunity, yeah? And now when it comes to the risk-free rate, yeah? When you're investing in such a market, you're not ideally, most equity investors are not going to invest for 1 year, right? Because the opportunity cost is not a 1 year treasury bill. Because you want to invest for a 5 year period. Some investors look at 7, some even 10 and above, right? So ideally, your opportunity cost, or the opportunity you're foregoing in that case, should be, if I'm not investing in this bond, or in this bond in this case, because this is a long-term project, the return that I should get should be over and above the return that the bond is offering me. Yeah. So that's the general overview you should have at the back of your mind when you're actually making any further presentations. Thank you. Bye. That's it.
Yeah, we'll have a discussion.
Good morning, panel and the audience. We are the analysts from Group D, Dorothy, Arthur, Desire, Asaf, and Julian. We conducted a research about CRDB, a leading financial institution in Tanzania, in Tanzania's banking sector. Tanzania has a population of about 70 million people, with CRDB leading with CRDB serving 5 million plus customers in the region. CRDB was founded in 1984, and later during the privatization process in Tanzania came to be called the CRDB Limited in 1996. CRDB has a vision to transform lives through financial sector innovation and sustainable business. CRDB has laid strategies from 2023 to 2027. Some of the strategic pillars are to future-proof the business and to grow the business. CRDB has the key drivers, and they include digital transformation and financial inclusion in Sharia banking and CMEs. CRDB has its headquarters in Dar es Salaam, and it is listed on the Dar es Salaam Stock Exchange with the ticker symbol CRDB. CRDB also has a total capital of about 1.9 trillion, and also by December 2023, it had stock price of about Tanzanian shillings 480 million. CRDB offers services like specialized banking and corporate banking, then also insurance. CRDB's financial performance is so far well, since it is a high above the industry average. CRDB also has numerous shareholders, with public ownership being the largest shareholder.
CRDB has a strong corporate governance with an independent board of 12 members, of which these members have an experience of 18 years and above. It has a composition of 83% Tanzanians and 17% are women. CRDB has a risk management framework and also follows the regulatory compliance. The transparency and accountability of CRDB ensures ethical business practices and also increases the investors' confidence. Concerning the environmental and social initiatives, CRDB used $300 million to launch the Chijani bond for renewable energy, sustainable agriculture, and waste management. The social impact, CRDB used $3.6 million allocated to health, education, and youth programs 2018-2023. 15,000 women were trained in entrepreneurship and finance skills 2022. CRDB has its financial inclusion, Islamic banking, and also the SME. The competitive edge of CRDB was the first bank to introduce the debit cards in 2002 and agency banking in 2013. CRDB is the market leader in Tanzania, the largest asset base of 16 Tanzanian trillion. CRDB has regional expansion to Burundi in 2012 and also to Congo. Concerning the strong market position, CRDB received its first Moody's credit rating in 2016. The SOC analysis among the strengths of CRDB has a strong brand and stakeholder relationships. It's a market leader in asset size, whereby you saw that it's 16 Tanzanian trillions. We saw, and also seeing the high profitability with a return of equity of 29% as of 2024. Among the weaknesses, CRDB is facing competition from banks, that is to say the National Microfinance Bank and also the Absa Bank. We are seeing that CRDB relies more on the Tanzanian economy. Among the growing opportunities, I think that CRDB has a growing youth population and also small medium enterprise markets. Among the challenges, CRDB having cybersecurity risks due to digitalization, regulatory changes and economic uncertainties. Back to the ESG, CRDB so that it's in line with the ESG 16, ESG 4, ESG 3, ESG 5, and ESG 1.
With financial highlights, CRDB has demonstrated strong financial performance with a net profit of 423 Tanzanian shillings, indicating 20% growth from 2022. The return on equity of CRDB Bank has been 26% in 2023 and 29% in 2024, indicating strong shareholder returns. The cost-to-income ratio has drastically fallen from 14.5% in 2023 to 45% in 2024, indicating operational and managerial efficiency. The revenue growth has been sustained due to digital transformation and an increase in capital base. Then with financial forecasts, our forecast indicated CRDB is expected to continue operating well, with projected net profit being in the range of 15% to 18%, loan growth being in the range of 13% to 18%, deposit growth in the range of 16% to 25%, and non-funded income contribution to total income being in the range of 35% to 40%. Ladies and gentlemen, according to the historical data, it has been quite evident that CRDB has experienced significant success within the financial sector due to the record profit holds, and therefore, as analysts, we do anticipate similar future trends if the business continues operating in a similar efficient way if make improvements where necessary. Therefore, with regards to International Accounting Standard 1 and using the Excel sheet forecasting model, we managed to reach at a projection in the year of 2028 and 2030, indicating continued growth in its financial statements. With valuation, our valuation analysis indicates that CRDB stock price has the potential to reach Tanzanian shilling 759.4, indicating 13.34 growth from its current price. We basically chose two models, that's the DCF model and the multiple market valuation model, whereby the DCF model looks at the valuation of a company by determining the present value of its future cash flows. Therefore, we had to discount the cash flows and also discount the terminal value, whereby the terminal value can either be the exit multiple, perpetual growth model, or even the liquidation value. This DCF model suggests that CRDB is currently overvalued by 34.9% and at a fair value of Tanzania shillings 496.83. We later came and used the weighted average cost of capital of 18.5% and onto the current stock price of 670 and reached a target price of 754.6, indicating a 12.6% upside. With the multiple market valuation model, this one looks at the valuation of a company by comparing its financial metrics to those of its peers and competitors. With the financial metrics, we chose the price to earnings, price to share, price to sales, and also price to the book value. And we saw that this market multiple valuation model suggests that CRDB is currently undervalued, way below the market value of its sector, with its price to earnings next 12 months ratio standing at 12.5, which is significantly below the market value and the industrial average.
Some CRDB Bank has managed to achieve all this because of digital transformation. 97% of its transactions are performed out of over its 251 branches. This has helped it to achieve a lot. The digital transformation is in the form of SIM banking, mobile banking, and the rest. It has been awarded and recognized in Africa as the best small and medium enterprise, that is in 2023, the Bank of the Year in Tanzania in 2024, and it has been given the Moody's rating and the Green Climate Fund accreditation. In the foundation impact, CRDB has allocated 3.6 USD in SDG 3 and SDG 4. This is through 500 health facilities benefiting from it and over 10,000 students getting scholarships, with 1 million allocated for entrepreneur initiatives. CRDB Bank we have had customer testimonials, stories, which indicate social real impact and satisfaction from customers. With this, CRDB is committed and ready to achieve its mission of transforming lives and developing economies through providing financial services.
The future vision and growth opportunities of CRDB. The bank is on a mission to become the leading financial institution in the sub-Saharan Africa by the year 2030. It is to achieve this mission through the following strategies: establishing new branches and partnerships in countries like Uganda, Kenya, and South Sudan, strengthening financial technology collaborations and enhancing the digital solutions like SIM banking, AI-powered financial services, and blockchain integration, strengthening sustainability initiatives in order to align with the global ESG standards.
With the investment summary, CRDB is a leading financial services provider that has extended its operation to countries like Burundi, DRC, and also in the Netherlands, whereby it launched the European representative office type in the European market. It has demonstrated or recorded a strong balance sheet with amounts 16 trillion indicating 26% growth, customer deposit base of 10 trillion also indicating an 18% growth. CRDB runs a dividend payout policy of 35% of its profit and the dividend yield being at 9%. The profitability of CRDB is currently driven by its net interest income that has improved due to the growth in its loan portfolio. Therefore, in our recommendation, CRDB has become the robust player, and therefore, despite financial and operational risks associated, CRDB's strategic investment policy makes it an attractive investment opportunity. Therefore, it's a buy.
In conclusion, CRDB stands at the forefront of the financial innovation, regional expansion, and sustainable growth. So whether you are an investor or a customer seeking seamless financial solutions, this is your moment to take up to be a part of this transformational journey. Let's work together. CRDB,
the bank that listens.
Yep. Thank you very much. I think I loved the way that you've echoed the mantra of CRDB Bank as a bank that listens. Okay. Good presentation. Just 2 or 3 questions. Number one, all the other presenters have been talking about the bank being established in 1996. But I heard you mention something about the bank being established earlier in the privatization or etc. So you'll just clarify that. Then, on your stock price, I thought I saw a stock price of 448. As that, as you're starting, I mean, at the start of the presentation, you talked about a stock price of 448. Well, I don't know the current price, but just based on the price that I've seen from the previous groups, I don't know if you might need to recheck that price, because the previous groups were talking about 660 something with upsides of 10 to 12%. So you might need to recheck that. Then again, I think I had an issue with your valuation methodologies. I think you're talking about free cash flows. Now, usually when you're valuing a bank, we tend to avoid using free cash flows because of the nature of the banking business. Okay, money out, money in all the time. Okay, so banks are productive when they lend money. Okay, and when they lend money, that's money out. Okay, well, that's a cash flow out. Okay, and so looking at the nature of the activities, we normally tend to avoid using free cash flows. Maybe you could try and explain what your thinking was around using free cash flows as part of your valuation methodologies. Yeah, thank you.
So CRDB was founded in 1984, and through privatization of farms in Tanzania in 1996, it became CRDB Limited, the cooperative rural development bank that we are talking about today.
And concerning the stock price, as of the third quarter of 2024, the current stock price was 670, but we projected the stock price to be at 754.6, based on our valuation models. Now, this was just an error in our slide. It's okay. Then concerning the valuation methodologies, basically, that's why we chose the market multiple valuation model, whereby we look at the financial metrics of the business. We look at the price to earnings ratio, price to sales ratio, and then price to book value. Whereby concerning the price to earnings next 12 months ratio, we had to first determine the earnings per share by getting the net income minus the preferred dividends over the outstanding shares minus the dilutive securities. Then we later had to find the price per earnings by getting the current stock price of 670 times the earnings per share we had. Then we had to determine a target price to earnings ratio using the historical data of the business, and then we had to come up with a target price of 754.6 per Tanzanian shillings.
Maybe just to make myself clear, how exactly did you derive the free cash flows for the dividend, for the discounted cash flow model? Because, like I said, the nature of banks is such that they make money when money leaves the bank as credit. Okay, so that makes a discounted cash flow model inappropriate or unsuitable for a business of that nature. So maybe you could just explain to me about that. Then lastly, if I forget, if you go to your financial highlights, yes, there. I had a bit of an issue with that particular slide. It's too crowded, there are too many figures. Wouldn't graphs be better at telling the story? Because with a graph you can see a trend, cost to income, profitability. Okay. Because I saw the forecasts, but I couldn't see most of those metrics in the financial highlights, and I felt probably using graphs, some sort of visual display would tell the story a lot more better than
With
crowding up that particular
with
slide.
financial highlights, we have a graph showing the growth in total revenue, because we see that total revenue growth has been sustained due to digital transformation and an increase in the capital in customer base. That's the graph for the growth in total revenue. Then you also have a graph for cost to income ratio, whereby you see that it has drastically fallen from 49.5% in 2023 to the 45% in 2024, indicating operational and managerial efficiency. Then when you go back to the DCF model, we use the historical audited cash flow statements of the business, and therefore we came up with a projection in the years of 2028 and 2030 using the Excel sheet forecasting model. Therefore, we continued and had to get a weighted average cost of capital that was in line with the time value of money, and also in regards to the associated risks within the financial sector. We had to discount the cash flows and also discount the terminal value, whereby you say that the terminal value can be the value after the forecast period of the business, and say that the terminal value can either be the exit multiple, the perpetual growth model, or even the liquidation value. So basing on those, that's how we came to apply the weighted average cost of capital of 18.5% using the DCF model onto the current stock price of 670, and we got a target price of 754.6 Tanzanian shillings, indicating a 12.6% upside.
If I may, I think what Dixon is trying to say, I've understood that you use a cash flow model for a bank. What he's trying to say is that there are very many methodologies of valuing a company. Some are new, some are old. However, you have to determine if the methodology that you're going to use is the right one for that particular business. Now, a cash flow model, a cash flow statement for a bank, as he has explained, has a lot of movement. Money coming in that belongs to the bank and money that does not belong to the bank. And therefore, a DCF would not be an ideal methodology to use for a bank because of that reason. And maybe you can go read up on it or do some more research on it if you continue to the next round and see what better methodology would be for the bank, on the valuation, just clarify, did you merge the DCF and the multiple methodology and the valuation, what is it called? Let's go back. Yeah, the market multiple valuation. Did you match the two, 50-50? So you got an average of the two to get a price?
Yeah.
Okay. So for me, my comment is that, or you can highlight, I've not had anything on how CRDB compares to its peers, where it's placed in the industry, what does the industry look like in general. I've had a lot on CRDB, which is good, how profitability is growing and whatnot, but I've not had anything on the industry in Tanzania, the banking industry specifically in Tanzania. And another thing, just a tip. This is something I've learned because I'm also quite fast when I'm talking. When you're presenting, please slow down, especially the gentleman. I didn't get your name with the microphone because you are so fast. I cannot say what you have said. Like, I don't remember anything that you have said because you're really, really fast. So please slow down. This is just a tip. I also got the same tip because I speak quite quickly. If you're very fast and people they can't hear what you're saying because you're really fast. Yeah, so those were my questions.
Yeah, on the side of market peers, we see that's the reason as to why we chose the market multiple valuation model, because it looks at the valuation of a business or a company by comparing its financial metrics to those of its peers and competitors. That's how we come up with a price to earnings next 12 months ratio of 12.5 that is way below the industry average, which is at 14.5.
Okay, so again, just a tip, that should be very clear. There should be a slide just showing us how the industry is performing, what are the NPLs of the industry, what are the NPLs of CRDB compared to the industry, what is the cost of income for the entire industry, how does CRDB compare, things like that. There should be a slide just showing us that there was a SWOT analysis. There is a bit of a typo on that slide for CRDB, but again, we need to see how the entire industry, the banking industry, works. You know, you could use the 5 porters. Your colleagues have been using the 5 porters to give us a snapshot of how the banking industry works. Are there substitutes? Are there threats to this industry? And things like that. So you can consider that going forward, just to give us a snapshot of what the banking industry in Tanzania looks like. Thanks.
So, Team D, good morning.
Good morning.
You're well?
Okay.
So for me, as from the first slide, there's something on total capital. What were you referring to? Is it the core capital or the market capital, market cap of the CRDB? The 1.9 trillion. The next one. Okay. So also, I had a question on how you guys arrived to the dividend payout ratio of 35%. Is it 39%? And also, maybe give me a highlight, an overview of DB's risk profile.
Beginning with the dividend payout policy, we say that it is currently running a dividend payout policy of 35% of its net profit, and the dividend yield currently standing at 9%.
And the risk profile?
Maybe the risk profile, we may consider the cyber security risks due to the increased digitalization and a percentage of 97%. And we may also go further and consider the economic factors such as inflation and also that may be all.
It's a good attempt. It's a good attempt. Yeah. Okay, thank you.
Thank you so much. Mine is a comment. I was looking forward to the first slide because usually, especially when you don't have enough time to pitch, it's very good to bring out the main ingredients of your presentation. So, for instance, you would say something like, this is our recommendation, and it's based on these 2 factors, or these are the biggest factors that come out when we analyze this bank. So then when you go ahead to do a business description and company analysis, you've sort of given us where you're coming from, but you've already emphasized what exactly you're looking to do. And then you justify that within the rest of the presentation. I feel like it didn't come out quite clearly. And then also within the industry and company analysis, I think my colleagues have also talked about it. When you're looking to invest in shares or stock, one of the biggest components that you look at is the macroeconomic stability of the country. So when you speak about Tanzania, how is it? Is it looking to grow? What are the projections of its GDP? Because when a company is looking to, and when a country is growing, it means there will be more demand for credit. And then when there's more demand for credit, the banks are going to make money. So it's very important to also highlight those macroeconomic aspects of a country, especially when you're focusing on those investments. Thank you.
I think I don't have anything to add to what my colleagues have said. You could take your seats. Thank you.
Good afternoon, ladies and gentlemen. My name is Oriakot Cornelius, and together we are Team E. Ladies and gentlemen, our recommendation for CRDB Bank is a buy recommendation based on, because of our target price of 849.87, an upside of 26.85% from the closing price of 670. We issue our buy recommendation based on 4 major catalysts, which are digitalization and innovation, asset size and large market cap, regional brand and future development plans, which are long-term strategy from 2023 to 2027. Now, when it comes to digitalization and innovation, CRDB Bank launched a new digital customer service system, which uses AI, or artificial intelligence, named ELE. And because of that, ELE has enabled it to get into close contacts with the customers, and it has increased on its customer deposit and loans. We see an increment in KAGR of 12.6%. Similarly, when we look at regional brand as another catalyst, regional brand, we are seeing CRDB as the only local bank in Tanzania with a presence in 3 different countries. That is to say, Tanzania, the motherland, Burundi, and the most recent one in DR Congo. And then also we are seeing it in terms of asset size and market. It has a whooping big share of 27%. It owns 27% of the total assets. Out of the total assets of the industry of 60.28 trillions, it owns 27%. How big is that? With the banks of the commercial banks in Tanzania being over 40. So that means their share is really big. 27% out of over 40 banks, that's really big. Then allow me to invite my sister here, Anita, to take us through.
Thank you. With business overview, CRDB Bank is a fully-fledged commercial bank that first founded in 1984 as Cooperative Road Development Bank of Tanzania. It became CRDB Bank Limited in 1996 after the privatization of state-owned firms by the Tanzanian government. CRDB Bank was later listed in Dar es Salaam Stock Exchange in 2009, and it is enjoying over 5 million customers. CRDB Bank, it is current as a group. It is present in 3 countries, that is Tanzania, Burundi, and DR Congo. Ladies and gentlemen, when it comes to business model, CRDB Bank operates through 3 segments, that is corporate banking, retail banking, and treasury, and recently launched bank assurance in 2023. Ladies and gentlemen, these segments posted over 424 billion in profit after tax in 2023. Thank you. Over to you, Gloria.
Under industry overview, CRDB Bank operates under a resilient and remarkable growth. The GDP grew to 5.2% in 2023 from 4.5% in 2022. Onto that, inflation declined from 4.3% in 2022 to 3.8% in 2023, below the Tanzanian medium target of 5%, making CRDB Bank in a position to gain its strength on interest income and increase its profitability. Under industry overview, CRDB Bank is Tanzania's banking sector is well capitalized, profitable, and stable. In Q3 2024, the total assets stood at 60.28 trillion, with 77% being controlled by the largest top 10 banks, and then 23% by other banks. On return on assets and return on equity, it recorded records of highs of 5.9% and 27.9% in March 2024. Under competitive positioning, we use Potter's 5 forces, where on a scale of 1 to 5, we looked at CRDB Bank, where threat of new entrants is low due to high capital requirements and restrictive regulations to join the banking industry. However, CRDB Bank also faces bargaining power of consumers it faces threats of substitutes and bargaining power of consumers due to many financial service providers. Thank you.
Ladies and gentlemen, our financial analysis was based on 4 factors. That was earnings quality, profitability, capital adequacy, and asset quality. For profit after tax, that is profitability, we noticed that it has been recording increase in profits over the past few years consistently, noticing a 20.3% increment in the year 2023 alone, and also for total assets, it has recorded 17% cumulative average growth rate, which indicates proper credit risk management and also improvement in resource management. Asset quality, we see that CRDB's non-performing loan ratio has been reducing over the years, and it is always below the minimum threshold of 5% and recording a 2.8% in 2023, and also projected to be maintained below that. For liquidity ratios, they have been well managed and maintained way high above the regulatory requirement of 20%, also showing that it always has sufficient money to operate. And for capital adequacy, we see that it has always been high up the minimum threshold. That is for 14.5% total capital, recording as 17.38% in 2023 alone, showing that it manages its capital, its resources and capital efficiently. Ladies and gentlemen, allow me to welcome Cornelius to take us through valuation.
Thank you. When it comes to valuation, we valued CRDB Bank on weighted average, where we got a target price of 849.87. That's an upside of 26.85%. So when it comes to the RIM, the weightings, we got a weighting of 15%, 30%, and 55%, respectively, for residual income model, dividend discount model, and then the comparative valuation. Now, when it comes to the dividend discount model, we got a target price of 1,327.3, which clearly shows that CRDB Bank is being undervalued. The assumptions underdid, we have dividend growth rate in period 1, which is 10%, dividend growth rate in period 2, which is 11%. The increase in dividend is a result of CRDB's continuous expansion and acquisition of new subsidiaries. We also have the cost of equity of 16.17% and then the beta of 0.48. Then also we used a residual income model to assess the profitability level of CRDB Bank, and it gave us a target price or implied share price of 1,313.3, which clearly shows that CRDB Bank is still being undervalued. And finally, we use what we call the comparative valuation or relative valuation, and our comparables were based on the local peers in Tanzania, the regional peers, and then the African peers. And that together we're able to get, we subjected that to price to earnings and then the price to book value, and it gave us an average of price to earnings of 3.62, and it gave us, at the end of the day, that one gave us a target price of 462.93. Over to you, Gloria, for ESG.
When it comes to ESG, CRDB Bank aligns its ESG in line with sustainable development goal. It focuses on 2 main factors, that is ESG and climate fund. Under climate fund, it focuses on financial inflows and implementing projects and programs that address climate issues. Onto that, it made CRDB Bank to be one of the first commercial banks to be accredited UN Green Climate Fund. Under social, it focuses on providing financial access, and then under environment, it launched a Kijani Fund in 2023. Then under governments, it's headed by CEO Mr. Abdul Majid, and then diversity of board composes of male and female, and then employees 56 male and then 44 female, among others.
Despite our reasons to support our buy recommendation, we still believe the bank has got some risks.
and a risk matrix was conducted to assess the likelihood and the impact of the following risks on the bank. Microeconomic and geopolitical uncertainties do pose, and microeconomic and geopolitical uncertainty and cybersecurity do pose a higher impact on the bank, meaning if at all any of those risks is to happen, a bank will have a bigger damage. We further looked at liquidity risk and credit risk, which have a higher frequency, meaning these risks are most likely to happen at any time. However, don't be worried of your investment because CRDB Bank has put up measures to mitigate those risks. Credit risk, it has made sure all the risk, credits are insured, and the microeconomic and geopolitical uncertainty, the bank has made sure that it diversify its assets into different economies. So don't be worried to invest with CRDB Bank, a bank that listens. Invest with CRDB Bank for your future development. Thank you. Asante. Over to you, judges.
Thank you. Hey, okay.
Thank you, sir. So first and foremost, from your first slide, I realized you guys had a price of 849.5, which was quite high. Why would you say so? 849.87.
The target price of 849.87 was
Yeah.
as a result of that is an average of the three models that we used. The DDM, the residual income model, and then the comparative valuation or the relative valuation. That is an average that it gave us, which gives us an upside of 26.85%.
Okay. Also from your presentation, I could notice you're trying to put a graph on every page because it was too crowded. Some slides don't need those graphs there and whatever, as much as they look presentable and all. And our analysis, we try and do minimalism such that the investor can easily see your presentation and straightforward he can make a decision out of minimalism. You're squeezing the words to the end, whereas you could just put a couple of words. No, it doesn't need a graph like the risk, location, and all that. So you say that CRDB is currently undervalued with a PE ratio of 3.62. Yes?
Yes.
And so my question is, how did you come up with the solution, the fact that it is undervalued? Do you compare to the industry and all?
It is being, we are looking at how the industry is generally performing in terms of the profit after tax. So when you did our formula for looking at the price to earning ratio, we realized that the bank is being undervalued.
For me, I would add on to that by saying, whenever you want to try and prove that a bank is undervalued, by checking the PE ratio, you need to check the PE ratio of the bank and then compare it to the sector. So you need to give me the average of the sector, maybe tell me the average of the sector is currently at 12 point and currently CRDB's ratio is currently at 3.62, as you said. So with the comparison of the two, we can tell that CRDB bank is undervalued. So we expect the share price to go up, right?
Yeah, thank you for the clarification.
Okay.
Can I go? Yeah, thank you for your presentation. I think my colleague asked a question about the price of 845, the target price that you reached. And I think to me, looking at the valuation models you used, I have a big problem with the weighting of relative valuation. I think you gave it a weight of about 55%. Let's just go back to that table, which had, yeah, there. So you seem to have given relative valuation about 55% of the weight, okay? And to me, I suspect that is what skewed the price towards 845. Now, just some advice in the event that you proceed to the next level. usually for valuation, you're better off using free cash flow models, okay, or proxies, okay, or a proxy for free cash flow. Dividend is a proxy for free cash flow, okay. So when you're weighting, you tend to overweight free cash flows or proxies for free cash flows rather than relative values such as PE. Then on the PE question that he had, I think you didn't answer that question well, because you actually had a graph where you had different banks and their PEs. I think, let's look for that. You had a graph where I could see South African banks, I could see the logo of Equity Bank. Yes, that particular slide, okay, where you're basically showing the PEs and the average PEs. But I think for me on this one, what caught my attention was the South African banks, okay. I think usually when you're doing comparisons, you need to make a comparison where you have almost similar settings, okay. So comparing Uganda to Tanzania, Uganda to Kenya, I think that is fine. South Africa has got a first world, they have a first world economy, okay, within Africa, okay. So they might not be the best comparators, okay. So if you go forward, that is something for you to consider. But I love the fact that you talked about the business model. Then I think you're the first guys I've seen talking about a compounded average growth rate. So I think that was good.
Thank you.
I think there are no other questions. Thank you so much for your presentation. You can have a seat.
Well done to the teams that have presented so far. Still wishing you all the best. Thank you to our judges. We have one more team to go, but we have tea outside. I think we'll make it a working tea, if you don't mind, judges, so that we can try and catch up. So if you feel you need to refill, please just quietly step out, pick your tea or coffee, and come back as we continue. So we've just agreed with the judges. Let's do the last team. Take 10 minutes break and then come for the proceeding 4 teams.
All right. Allow me start by acknowledging the judges with utmost respect. I salute you. Protocol observed. My name is Aine Amon, and with me is Diana and Lam. So let's go right away. Maybe a disclaimer. We are going to use a funnel-based approach. We are going to start with the sector in general as we zero down to CRDB. As you can see, when you look at sectors in Tanzania, we picked 11 sectors. For example, you see like the financial sector is leading the way when it comes to stock. You see, it's the one that puts out most shares on the stock exchange market. And when we go to the market capitalization, the price tag people put on financial institutions is quite high on their prices, on their shares. And when we go to the dividends that are yielded by the financial sector, you realize there is quite a lot they receive, over 2.3 in dividends. And when we go to the price equity ratio, the figures tell the difference. And profitability margin, by profit margin, here we are looking at return on investment. And I realized the reason as to why maybe it performs better, because in financial analysis, there are models they use, like the internal rate of return, payback period. They use the marginal rate of return, profitability index. All those help them to forecast and be able to perform better. No wonder the financial institution performs better when it comes to profit margins in Tanzania. The ID change, these are changes in a day, stock prices, and 1 year change. And these are measured by what we call the beta. The beta is a model that is used to measure volatility. That is the fluctuations in prices. And you can see that the financial sector in Tanzania is very stable. If you allow me proceed on to the next slide. From the financial sector, let us see how it is in Tanzania. And you realize that there are quite a number of players in Tanzania, and no wonder it's performing well when it comes to other sectors in Tanzania. You realize it contributes over 56 trillion in total assets, customer deposits, and total loans and advances. And point to note that commercial banks lead almost 70% of the financial institution in Tanzania. No wonder we have CRDB Link leading the way, because you bear with me. I was reading through the profiles of the board. They have over 12 members of the board. On the top management, they have over 17 members. All these people are what we call creme de la creme. They are very well versed with models to help improve the institution. No wonder why it's performing the way it's performing. So allow me rush through, as you can see, the numbers of people of players in the CRDB, in the financial sector in Tanzania. So let us look at CRDB. We know that it's a wholly owned private commercial bank in Tanzania, but it also has not only it has its funding, but gets funding. For example, last year alone, it had funding from African Development Bank up to a tune of 129 US dollars. It gets bank money from Investec Bank and Inertia San Paulo. All these monies support its existence, and with its models and capable team and structure, it's able to perform very well. We looked at CRDB's performance in the top 5 banks in East Africa. You realize it's among the top 5 local banks. I know we have Stanbic, but we are looking at local banks top performing. And no wonder CRDB is among the first 5. So no wonder it's not a mistake that they are performing the way they are performing from how we evaluate this. So CRDB not only exists in Tanzania, but it also has its presence in Burundi and Congo as well. And during the SWOT analysis, we shall get to know how that affects it positively and also negatively. So when you see the negative, the green-like figures, it shows the percentage CRDB contributes and owns in the banking sector in Tanzania. It owns over, most of them over 10%, and no wonder that's why it's the way it is. Because of time, you look at the figures it controls as compared to that, and it also has liabilities, and because of time, allow me, my colleague, to run through the statements.
Good afternoon. My name is Lam once again. I want to take you through the P&L, also called the Statement of Financial Performance. And in here, this statement to an investor, to any stakeholder, to any user of the financial statement, you need to see what are the components of the incomes of the bank. And you see the interest, you see commissions, charges, and so on. And it is doing well so far. You look at the expenses that the bank goes through. What are those that they use to run? And we see a list of expenses in there. And when we go down, we go to see, is the bank making any profit in this year or over the years? Yes, we have seen the bank has made profits. But when we look at the statement of financial performance, we don't only end there. Later on, we are going to see how we relate it or how we interpret it to see whether what we see as a profit or loss is really true. And I want to take us to another set of financial statement, that is the statement of financial position, where we look at what are the assets of the bank, and they are listed there. This is a bank which has got so many assets listed. I cannot name them one by one because of the time, but also we see how are these assets financed. The assets are financed by both the capital and the liabilities, the loans. That is how this bank has performed. But even then, we are seeing that everything else is so far okay. And so when we move to see, look at that graph, we see that our assets are more than the liabilities. Much as, yes, there are liabilities, there are all these, but the bank is really doing well. They have managed every aspect of their operation entirely well, and so that's how the graph is depicting that. Now, when we move to statement of cash flows, here we are looking at what are the operating activities and how are they performing into the performance of the bank. And we are seeing that we have a positive cash from operations. That means they are able to finance their day-to-day activities without any challenges. When we look at the investing activities, we are also seeing that the bank has continued to invest. And then there are the financing activities. So these are all indicators. And in fact, from here, we started to see that if we saw the other profitability, the other side, how is it in real cash basis? Cash flow statement shows us exactly how we are transacting. Looking at the profit alone is not enough. We normally must come to this other set of financial statement to relate to how the other two have operated. And we see that everything else so far is very good with this bank. And we went ahead to see the graph that shows us how the progress is. There is everything else very stable. So to an investor, you would want to see that. And now we have here an overview, which is a summary of all the things that we have talked about. One, the financial performance is very strong. Profitability is seen. We have solid revenue growth. It has continued to grow, which is very, very perfect. We have significant portfolio profitability, which is really achieved over 63.14 billion. We have this other statement here, which is summarizing another trend. So we can see that the evaluation is here carried out. The book, the stock price statistics have been indicated, and you see at positive 43%. So in the stock exchange market, this bank is really very okay to an investor, to any other person interested in using their financial statements to evaluate. And so allow me hand over to my colleague to proceed with the others.
Thank you so much. I'll air out the recommendations for CRDB Bank. It should be focusing on sectors that are really in agriculture for investment, Also, we looked about we looked at exploring more markets in COMESA as a recommendation for the bank. Lastly, the recommendations we are looking at, it should consider looking at analyses for different competitors so that it can improve its other competition ways in the industry. I want to conclude with a conclusion. I want to say that the bank has been great in making a relationship with the government of Tanzania, and this is really going to be helping it in a steady future growth as a bank in Tanzania. Thank you so much.
Thank you. And I think we are glad to have UMI on board. I think it's the first time I'm seeing you guys on board, so. Okay, now, just a few questions. Number one, valuation methodology. I don't know, it didn't come out clear for me, unless there's a slide that I missed. Okay, maybe you will just refresh that particular slide. Then on ESG, I also felt like you didn't come out very strongly on the ESG aspects. Maybe you could just comment on the ESG aspects and valuation. Thank you.
So I'm going to speak, and then also my colleague continues the statement of changes in equity. But thank you very much. When we were talking about the, I'm sorry I was rushing because of time, but when we start seeing the description and CRDB valuations on this other green side, sorry if it's not, the green is overshadowing it, that in the sector financing, out of 56 trillion assets owned in the financial sector, CRDB owns 16 trillion. And out of the total customer deposits in the whole sector of financing, we see CRDB owning over 10.3, and the total loan advances following suit. But in a deeper conversation, we are also looking at its subsidiaries, as we can see, the total assets, the total customer deposits, the loan loss portfolio, the NPL, that's the non-performing loans, and also down the liabilities, that as they increase in assets also and expanding, the liabilities were increasing. But in a deeper conversation, let my friend also talk about the statement of equity that we were rushing through. Changes of equity, yes.
Yeah, when you look at the statement of changes in equity, that statement, investors are always very much willing and looking out to see, is the bank doing well with the reserves? Is the bank doing well with the retained earnings? Is the bank giving out dividends, to issuing out dividends to the shareholders? And we see that in 2023, the bank indeed paid out dividends. In 2024, probably when the financial statements were drawn, maybe the dividend was not yet paid, but we don't know what has now, that is an internal information that is not yet here, but we see that yes, the bank is doing well, they really pay their shareholders their returns. And we also see that there is growth. When you look at you take me where? I want to see where the total down, compared to 2023 to 2024, because there is a good, no, just the other statement. I think the space. Yeah, we see, there is, there's what you're covering. Yeah, so you can see net assets, all net liabilities, we are in a positive in 2024. as compared to some figure which was in 2020. So there is a growth in there. So the investors should be comfortable with seeing the growth in their investment or their income. So when we see profitability is really in, so we use some of these things to test one thing, whether there is compliance with the regulatory authority. Even CMA, I know, desires to see that statement of equity is issued, and those are the things they will see to encourage market investing in this kind of entity. And so that is another thing that we have used to value to see whether the entity is really in the right track. Yeah, again, when you look at the statement of cash flows, where we also can see the liquidity in reality, is it really there? Are we able to generate income and then we pay? We see that yes, all these operations in the current time, they were real. And so we relate the statement of financial position and then the statement of financial performance to come and put the two in. And then when we come to add these three, we go back to interpret them again using the ratio analysis. When we compute ratio analysis, we see that yes, there is profitability in the bank. And so those are the things that we used to test the performance of the bank.
So for me, I would go with the, first of all, you are the first team. I would like to congratulate you for sharing the financial statements. So apart from that, as much as you guys shared the financial statements, there's, kindly to the next slide. There's the slide which has the ratios there. So in analysis, we try to emphasize on minimalism, whereby as much as this slide is quite informal, it has a lot of information, the bottom aspects down there would have communicated a lot in a separate slide rather than having it packed in one slide, right? Okay, apart from that, your first slide, there was a statement on wholly owned private commercial banking. Like you said that CRDB is fully private and it's listed. Those are two contradicting statements. The first slide, you said it's wholly owned by private commercial banking or something like that.
Yeah, I think the communication, the message there is that this is a private commercial bank. It does not have anything to do with the government. It is purely private, but because it is listed on the stock market, it allows other shareholders coming in to buy shares to trade within. But it is purely private. It's not anything to do with the government. It's not public. Maybe like you see government has shares in it. No. That's what he meant to say or to communicate.
Okay.
Thank you so much for your presentation. Mine are more of comments and clarifications that you could provide. The first is, the first clarification is what period were you using or were you referring to when you were doing the analysis? Was it December 2023 or was it quarterly figures? Were they annual return? Were they annual financial statements, or were they quarterly financial statements?
Yes. For 2023, we used the annual, but 2024, because we had already started on the analysis, we used the quarterly. The last quarter that was used, that was Q3.
Okay, so my comment on that, it was a bit confusing because I was seeing some information on December 2023 financials. That would be the full year, right? And then quarterly as well. So it would be preferable that when you're doing an initiation for a company, you're covering it for the very first time, it's best to use annual financials. right? Then as you continue to cover the company, you look at the quarterly returns that they release to help you now sort of assess what the next year is going to look like, right? For example, now if you have the first quarter of 2020, no, we haven't finished first quarter of 2024, right? You get those financials, they come out maybe around April, May, and you've already forecasted your figures for 2024, right? So then those financials are supposed to help you see, are you on the right track? Do you need to make changes here and there? So ideally, you should use annual returns or annual financials to do an initiation of a company, and also best for projections, especially if you are presenting them to probable investors, right? So that goes for all ratios and analysis towards a company. It's easier to compare like for like. So if you're comparing this year, 2023, then you're comparing 2022 as opposed to comparing quarter 1 2024 to full year 2023. Then just to add on to what my colleague has said, some of the slides were a bit crowded. When you're presenting again to investors, yes, it's nice to have all that information, but the ratios communicate a lot more than the entire statement, especially in the time that you're given. You're given 10 minutes. I want to see what makes this company tick. So you're giving me ratios, basically. Then I will come back and ask for more information if I'm intrigued. Yeah, because when you were presenting and you were saying that dividends were unknown, that's why I was asking what figures did you use. Because if you're using annual, if you're using the annual report of 2023, the dividends are known. So you know what you're working with. And to add on to what my colleague Dixon had also highlighted, I missed, and even when you came back to it, we missed a slide on valuation. And when we are referring to valuation, we're looking at, okay, the price of CRDB on the stock exchange currently, I don't know what it is say, let me say 400 shillings or 200 shillings. In your valuation, do you think that 200 shillings is the right price for CRDB? And then if you don't think, then your valuation is supposed to show that we disagree. We think the valuation should maybe be 300 shillings based on this valuation that we have done. We have used metrics A, B, and C to get this value, and we think this should be the price of CRDB. So that missed from your presentation. And I liked the comparison showing us, you gave us in detail how CRDB has grown, profitability, and all those things that are related to CRDB. But what missed was comparing CRDB to the entire banking industry in Tanzania. Because as an investor, I want to see this company that I'm buying, okay, it looks good here, but in the industry where it is based, how is it performing? How does it compare to peers? What is that industry like? What is that country like? We're in Uganda, and we're saying to invest in Tanzania. You're familiar with Uganda. You're familiar with how it grows. Now you want to take your money to Tanzania. How does that economy compare? For example, I'll just give an example. What is currently happening in DRC right now, an investor would be spooked by it and would probably say, let me wait for this to slow down, and then I'll come back in. So that kind of information about an economy growth, industry growth, the entire environment that you want to invest in is very important for an investor. Thank you so much. Those were my comments.
I think that's fine. Thank you, Tima.
Good afternoon, everyone. All protocol observed. My name is Justine from Group G. I'm here with Letitia and Namboira. We are excited to share with you an investment opportunity in CRDB Bank, the bank that listens, Tanzania's largest bank by assets. We initiate a buy recommendation with a target price of 801 Tanzanian shillings, a 21.4 upside, supported by strong fundamentals and a favorable market positioning. The bank was established in 1996. It was listed on the Dar es Salaam Stock Exchange in 2009, and it is part of CRDB Group. The bank has approximately 6 million customers, and it holds a 27% market share in Tanzania. It has an extensive nationwide branch network with over 226 branches and 690 ATMs. It has diversified revenue streams of corporate banking, retail banking, and treasury, with retail banking making up 67% of group revenue.
The banking sector in Tanzania is a critical component of the financial system in Tanzania. In 2024, by October, Bank of Tanzania had registered over 46 financial institutions, among which 34 were commercial banks, where CRDB falls. Looking at the regulatory environment, the banking sector is regulated by Bank of Tanzania, and this is a strong base for the performance and stability of the industry. Bank of Tanzania is responsible for setting all the policies that are followed by all the financial institutions, such as the capital requirements, among others. Looking at the profitability of the industry, this is growing day by day, as evidenced by the sector's average return on equity of 15%, which was registered in 2023, vis-a-vis 19.8% for CRDB in particular. Then we also went ahead and analyzed the industry, and we used Porter's 5 forces model, where we saw the threat of new entrants as moderate due to the regulatory requirements, compliance requirements. The power of suppliers, we rated it at moderate as well, because the depositors have limited influence on the rates paid on their deposits. Power of buyers we rated it at high, because there are low switching costs, while the threat of substitutes is moderate because of the existence of other institutions offering similar financial services, such as fintech, giving an example of Tigo and Umoja companies. Finally, rivalry among competitors, we saw it as intense because the industry is dominated by basically 3 major players, that is CRDB, NMB, and NBC. And these cannot charge high prices for fear of losing market share.
Okay, on to the valuation methodologies. We used 4 methods to value CRDB Bank. We used the discounted cash flows methods. We used the dividend discount method, residual income method, and the relative valuation method. We weighted these methods and came up with a target price of 801 Tanzanian shillings, which is a 21.4 upside from the last close of 660 Tanzanian shillings. We had a couple of assumptions. For the discounted cash flows, we assumed growth is driven by free cash flows to farm. For the discounted dividend discount method, we assumed a strong dividend history as displayed in the financials of the bank. For the residual income, we assumed sustainable residual income. For the discounted cash flows and the dividend discount method, we used the cost of equity, which we computed using the capital asset pricing method. And then for the cost of debt, we used the Bank of Tanzania CBR rate of 6%, which we adjusted for tax of 30%.
We cannot talk about CRDB Bank without talking about its share price performance. In 2019, it experienced a decline from 135 to 95 Tanzanian shillings. This is due to the high non-performing loans in that year and the leadership changes. However, there is recovery and growth, which is evidenced by the 49.1 increase in earnings per share in 2024 quarter 3, and asset growth of 15.009 trillion in 2024 quarter 3. On to the financial analysis. CRDB Bank in 2023 is
revenue mix was comprised of 54 retail banking, 26% corporate banking, and 20% treasury. The bank achieved a 5-year CAGR of 12.6%, and we project that this will increase in the next years to 18.8%. We cannot negate the existing risk of stage 3 credit impaired assets, as these form the basis of non-performing loans. The corporate segment registered the highest credit impaired assets, and this also increases the expected credit loss, which affects profitability of the bank. Looking at the industry comparison, CRDB is a strong competitor among its peers, coming second after NMB Bank in net profits. It achieved a return on equity of 24.2% and 3.2% in return on equity and return on assets, respectively, vis-a-vis its peers like NMB Bank that achieved 25.9% and 4.4% in return on equity and return on assets, respectively. This is indicative that the industry majors are able to invest shareholder value and assets to generate income to maximize shareholder value. On to the net interest margin, it trended downwards amidst volatile global macroeconomic and geopolitical landscapes, registering a decline of 2.8% between 2019 to 2023. A slow recovery of 0.7% is expected. A slow recovery of 0.7% is expected while remaining cognizant of the escalating inflationary pressures in the global economy. On to the asset quality, the gross loans and advances increased. However, it was the growth trends were reducing. There were reducing growth trends, like seen in 32.8% in 2028, reducing to 18.7% in 2023. We forecast a 4.4% increase year on year in 2024 due to the decrease in the customer deposits to 8.73 and 3.2. The non-performing loans reduced from 5.7% in 2019 to 2.45%, which is under regulatory limits of 5%. This means that CRDB Bank is able to recover its loans, and which means it is performing well in loan recovery. CRDB Bank, in terms of capital and liquidity, is well capitalized above its minimum regulatory requirements by Bank of Tanzania, registering a 16.07% in Tier 1 capital ratio and capital adequacy ratio of 17.4%. On to the loan deposit ratio, it increased from 68.7% to 91.1% in 2023. This implies that most of its customer deposits are put into loans, and this may create a liquidity crisis because we projected it to actually increase to 110.5% by 2024. Finally, in cost efficiency, CRDB Bank reduced its costs from 72.6% to 51.5%, which is attributed to the net operating income growth, cost efficiency through digitalization, like the launch of the SIM banking app and the USSD, and improved load performance. We forecast this will reduce to 31.2% by 2028. In conclusion, CRDB Bank is well positioned for sustainable growth and market leadership due to its strong asset growth and leadership in retail banking.
The evaluation and analysis of CRDB would be incomplete if we do not talk about the risks involved. Among these include the regulatory risks, such as capital adequacy, and this can be mitigated by strengthening the capital base of the bank. We also looked at the macroeconomic and geopolitical risks, and these included the high interest rates, the liquidity pressures, among others. And with this, the bank can mitigate this by emphasizing capital management, as well as carrying out liquidity stress tests. Furthermore, we identified market risks, such as the foreign exchange hedging, cybersecurity threats, and among others. So with this, the bank can mitigate by emphasizing the climate risk assessment, by emphasizing let's go back. For For the market risk, the bank can mitigate this by emphasizing digital transformation, as well as introducing a strong, robust cybersecurity framework. Then, lastly, we looked at the climate-related risks, such as extreme weathers that affect operations.
Furthermore, the bank, looking at the ESG overview of the bank, environmental and social impact, we see that the bank issued the Kijani bond in 2023 to support sustainable funding, and it also aims for 50-50 staff ratio in order to meet the diversity and inclusion ratios.
In governance, we evaluated CRDB based on 5 factors: board of directors, top management, shareholder rights, transparency, and sustainability. In conclusion, CRDB Bank is well positioned for growth with robust risk management and sustainability focus. With its expansion plan to Asia, Uganda, Comoros, and Zambia, we reiterate a strong buy recommendation at 801 Tanzania shillings at 21.4% upside potential. Thank you so much. We'll now be taking questions.
Thank you so much for your presentation. And the slides were really well done. And mine is on the credit risk, on the risks. I think you highlighted the key risks as market-related risks. So one key risk that you left out, especially for a bank, is the credit risk. As you can imagine, the biggest work of the bank is to give out credit. So they try to do as much as possible to, first of all, assess this risk and then manage it. There are also other risks, like strategic risks, that also speak to the banking sector. And then also on the slide of, I don't know whether it was about time, on your slide of ESG, I think you mentioned some aspects to do with the environmental. I don't quite recall you speaking about the social aspects and the governance aspects. I don't know whether you were able to do any work related to that, or you could speak to it. That would be really helpful.
Okay. Due to time, we were trying to summarize, but we have 3 slides that were talking about the environmental initiatives, social and governance aspect of the bank. So for the environmental initiatives, the bank issued the Kijani bond, which is they're using it to raise sustainable capital in East Africa, and also they were awarded the UN Green Fund climate accreditation, where they focus on climate adaptation for smallholder farmers. On the social aspect, the CRDB Bank organized a marathon last year in 2024 to support young mothers' maternal health. And also, in their diversity and inclusion ratio, they have a staff ratio of 46% females and 54% males. They're aiming for a 50-50 ratio. And they also raised 350 billion Tanzanian shillings for the healthcare and youth empowerment. As per their sustainability report, we picked out just the major items. My colleague will take on the governance aspect.
When we talk about the governance, we evaluated CRDB based on 5 factors. The board of directors, which is made up of 12 members, 9 are non-executive directors, and 3 are independent non-executive directors. Out of those, only 66.7 of non-executive directors own shares. We believe that this can actually be improved to 100, because if they hold shares, they're able to actually suggest investments that will benefit the shareholders. When we go to the top management, which is headed by the company CEO, Mr. Nsekela, it's made up of 15 members, including the company secretary, and it's well diversified in terms of experience, so they're able to work to work on the opportunities that the industry presents them and also mitigate any kind of risks and threats. When it comes to shareholder rights, the CRDB Bank has a well-diversified shareholder portfolio, which have local investors, the local private sector, the foreign investors, the government investors, and the corporate unions. These are able, and they also have rights. They have rights to receive dividends, rights to attend AGMs, and rights to vote. When it comes to transparency, CRDB Bank publishes quarterly reports and audited annual reports, and also displays them in every branch of CRDB Bank. When it comes to sustainability, we evaluated sustainability on using the 4 Ps according to CRDB's goals, which is people, planet, prosperity, and partnerships. Thank you so much.
Thank you.
Yeah, thank you for your presentation. For me, it's more of a comment. I noticed the lady in the video kept on reading from the slide. So, for instance, if you can see this one, it's pretty succinct and straight to the point and has highlights, right? But there are those that were had a lot of writing on them, right? And you kept on reading word for word. So maybe for your future presentations as well, I think you need to keep things pretty summarized and avoid reading from the slides. You spend time preparing for this presentation, so you could just talk to what you feel is quite pertinent to your presentation and just leave it at that. That way you would save time, because according to our timetable, you had actually exceeded the 10 minutes that were allocated to you. Yeah, thank you.
Thank you for the presentation. I've liked the slides. They are very precise and straight to the point. My question is on the valuation methodology. If you could go back to that slide. So you did highlight that you used a DCF, a DDM, a RIM, and a relative valuation. There are 2 methodologies there that I disagree with to be used for a bank. But the first one, the one that stands out the most, is the DCF. Maybe you can clarify on why you chose a DCF and gave it a weighting of 30%, which is high compared to the others, in this case for a bank.
Okay, thank you very much. We use the DCF because, one, it offers flexibility to factor in other factors, for example, inflation or maybe capex expenditure, and also the fact that it enables you to value a company based on the future outflows. And seeing that CRDB has been in business for a couple of years, it's a stable company. Therefore, the assumption is that the future outflows will be supported basically using the free cash flows. That's why we used the free cash flows method.
So you used a cash flow statement, right?
We used the income statement and the balance sheet, and then we adjusted. Yeah.
Now, you can go back and do some homework.
Okay.
My experience with using a DCF for a bank is that it's a very difficult methodology, and it's usually not preferred because there's so much money flowing in and out of the bank, and their liabilities. By liabilities, I mean deposits that not necessarily belong to the bank. So it is not a preferred methodology to use to value a bank. But I'll give you some homework. Just go and do some more reading on methodologies that would be most ideal for the banking sector. There are very many valuation methodologies, but not all of them are ideal in all situations. And so when you're picking one, you need to pick one that is ideal for that particular company, industry, and situation. That's my comment. Thank you.
Thank you.
Thank you very much for the wonderful presentations and for being smart. So we're going to have a 10 minutes break. There's tea and just some snacks outside, and we'll be back for round 2. Thank you.
Good afternoon. Thank you. Good afternoon to everyone here. Good afternoon to the teams that have participated in today's research challenge. Thank you so much for showing up, for being here. We started off with 13 teams at the beginning of the challenge, and today we've had 7 teams show up today. And for me, that is already a win. When I was at the point where you were, I don't think I would have been able to stand here and do the presentations that all of you were able to do today. So I commend you for that. You have done something for yourself as an individual. You've learned how to work in a team because that's essentially where you're going. I have to say that you have made great milestones just being a part of this challenge as an individual and as a team as well. I would like to commend all of you. You are all very smartly dressed. You should clap for yourselves. In finance, that is usually the first thing that they look at. Not even just in finance, but the world all over. You walk into a room and people are sizing you up and down before you even say anything. So before you guys said anything, we were ready to listen. We were very eager to hear what you had to say. So once again, I thank you for coming. I thank you for taking part. It's been, I hope you've learned something. As a judge, I've also learned something from you as well. The learning never ceases. So today, I'll be announcing the teams that will be going on to the next round. And just to encourage the ones that are not going on to the next round, like I've said, just you showing up today is already a win. Just you taking part in this challenge is already a win. It's already a plus for you. You've already earned something that you wouldn't have earned if you had just stayed at home. So I'd like to encourage you that this shouldn't stop you. If you want to pursue a career in financial analysis or in any way, any sort of career in finance, please proceed. The judges will be available for discussions afterwards. If you'd like to get a bit more in terms of what the industry has to offer, where you would like to go, we'll be available to have chats with you, have discussions with you on how you can proceed. So I'll mention the teams that are going on to the next round. So these teams have been selected based on the presentations that have been done today, but also on the reports that were done earlier. So the marks from the two have been added up together to give us the final results. So the top 4 teams going on to the next round are Team A, congratulations. Team C, congratulations. Team E, congratulations. And Team G, congratulations. So moving on to the next round, we're going to request those 4 teams to leave the room. The rest of the teams, you can stay and listen in on the presentations that they're going to make. I've been corrected. You should stay. You should all stay. So we'll be starting off right away. We'll be starting with Team A. I hope you're ready.
Good afternoon, ladies and gentlemen. This is Team A, analyzing CRDB Bank PLC, one of Tanzania's leading financial institutions. My name is Jonathan Basalira, together with colleagues Ayebare Philip Ebo, Brian Odoch Emmanuel, Shadia Nabachwa, and Makande Stephen. We initiate coverage on CRDB Bank PLC with a target price of Tanzanian shilling 733, an upside potential of 12.77%, and a closing price of Tanzanian shilling 650 as at 16th December 2024. This buy recommendation is supported by 2 strong factors, being strong subsidiaries, which include the CRDB Burundi and the newly launched CRDB Congo, together with the point of digital transformation as our second strong factor. Ladies and gentlemen, CRDB Bank PLC has expansion plans into markets such as Asia, Uganda, Comoros, and Zambia. My colleague Brian is going to talk about CRDB's business description. Thank you, Brian, you're welcome.
CRDB was founded in 1996 and is one of the leading financial institutions in Tanzania. It also specializes in retail and commercial banking, and it enjoys a robust network of branches, ATM machines, and digital platforms, increasing the financial inclusion, especially for those who are not exposed to tech. It also has both banking subsidiaries and non-banking subsidiaries. We have DRC Congo and Burundi. Looking at the shares, Danida Investment Fund enjoys the leading majority with 21% shareholding. And we have PSSF Pension Fund that follows alongside other institutional and retail investors, shareholders. Then when we look at the non-performing loans, in 2023, CRDB Bank had a 2.6% non-performing loan ratio against the aggregate of 2.8, aggregate NPL. When we look at the total assets, they are the industry leaders in terms of total assets with 24%. When we look at the competitive positioning, we use the Porter's 5 forces, which shows competition in the industry is high. There are very many good players. Yeah, it's high. And the potential of the new entrants is low because of the high capital requirements. We went to the SWOT analysis. What we discovered is that the strengths and the opportunities outweigh the threats and the weaknesses. Thank you.
We carried out a financial analysis on CRDB Bank, whereby we arrived at an average score of 1.45, indicating a strong performance as regards to Basel III. The capital adequacy of CRDB Bank continues to increase from 2019 to 2023, whereby in 2019 it was at 21.97 and 24.28% in 2023. This is also supported by its Tier 1 capital, whereby it increased above the industrial average at 13%, whereby the industry average was at 10%. The asset quality of CRDB Bank, as we calculated it using the non-performing loan ratio, the loan loss provisions to gross loans, it shows an increment from 2019 to 2023 and indicating a strong performance according to our forecast. Management on CRDB Bank continues to show its ability in managing its cost to income ratio, which greatly increased from 2019 and 2023. As our team forecasted, we see that in the next 5 years, this will continue to happen, hence a buy recommendation. We calculated the earnings of CRDB Bank using the return on equity, return on asset, and the net interest margin, which stabilized around 6.5% to 7%, supported by other non-interest incomes, for example, fees, commissions, and other investments. The liquidity of CRDB Bank continues to show an increasing trend, as at in 2019 it was at 65.65% and 95.33% in 2023, making CRDB capable in managing customer needs and also the regulatory requirements. CRDB continues to show its ability to manage sensitivity to market risks, which include foreign exchange exposures and the changes in interest rates. How did we value CRDB Bank?
We arrived at a target price of Tanzanian shillings 733, which is a weighted average of both intrinsic and relative valuation methods. It represents an upside of 0.77% based on the last closing price of 650 as of 16th December 2024. We attached a largest weight to the dividend discounting model due to the strong dividend payment history of CRDB PLC, showing its ability to drive value to shareholders. We used the two-stage model, which looks at the long-term growth rate of dividends as well as the short-term growth rate of dividends, arriving at a share price of 655 Tanzanian shillings, using a required rate of return of 26.87, which we calculated using the bond yield plus method. We also used the golden growth model, which gave us a target price of 665 Tanzanian shillings, using a cost of equity of 26.87%, which we calculated using the bond yield plus method. The residual income model, which looks at the presented value of future residual income, as well as the book value per share, was also applied, which gave us target price of 647 hence giving us a strong buy recommendation in our support. The relative valuation methods were also applied in order to evaluate the standing of CRDB relative to the market. The PE, the price to earnings multiple gave us share price of 712 Tanzanian shillings, showing us a strong upside based on the peers multiple of 4.4 times. The price to book multiple gave us a share price of 878 Tanzanian shillings, giving us a strong upside based on the peers multiple of 1.35 times. Investors not only look at the strong valuation and financial analysis, since the game goes beyond the numbers. Philip Ebo, how sustainable is CRDB?
Not offer a buy recommendation based on maximizing your wealth, but also to invite you for an opportunity to invest in the planet, to invest in partnerships, to invest in prosperity, and also to invest in the people. CRB Bank has invested in Kijani Bond and has raised over 171.8 billion to invest in different green projects and green initiatives. Look, going forward, its partnership with the UN has also raised $200 million to invest in different agri-based startups and different projects. Looking at this, at 2023, CRB Bank has invested over 813.7 billion in its different projects, including its headquarters, construction of its headquarters that has been age certified. Looking at this green asset ratio, it stands at 7% as 2023 with a target of 30% by 2050. Moving on, looking at its waste management initiatives, it has recycled over 50 kilograms of waste and has reduced its paper usage by 5%. This is accredited to its digital transformation and digital tools. Looking at its social aspects, its foundation, it has raised over 2.8 billion, investing it in health, education, and community initiatives in campaigns such as Imbeju, which has raised capital for women and youth in small and medium enterprises. Looking at this governance, the governance has been charged with looking at the compliance with different laws, compliance with regulations such as anti-money laundering and terrorism counter financing and different policies. Let us look at the risks as well.
Thank you so much, Philip Ebo. CRDB Bank has a very great performance, but it's also prone to risks. And using our risk matrix, we realize it has the credit risk and operational risk as the main risks, but there are mitigation strategies to ensure that these risks are curbed.
Ladies and gentlemen, we cannot understand the investment risk, especially the market risk, without doing a sensitivity analysis. This was applied specifically for the Gordon growth model, which takes the highest market share, which is the highest percentage on the market share. The two variables which were used include the cost of equity and the dividend per share. The cost of equity was flexed between 21.87 and 29.87 using an increment of 1%. The dividend per share was flexed between 49 to 63 using an increment of 1 Tanzanian shilling. Though there are different fluctuations between these variables, our target price remains stable, and therefore we stand strong with our buy recommendation with a target price of 73 Tanzanian shillings based on an upside of 12.77% from the last closing price of 650 as of 16th December 2024. Thank you so much.
Thank you. I think I'm just curious on what you call the business description. If you go to that slide, I felt like it fell short of what a business description is. Because what you seem to look at is the structure. You seem to look at the business structure. Business description? Business description. It was among the first two slides, I think.
Right there.
Yeah. I don't know. I found this a bit wanting. You just seem to look at the structure of CRDB. Next slide, just next. Then the shareholders. Okay, that seems to be your business description. And my thinking is, if you're talking about business description, you might as well look at, what are the different divisions? Okay, do you have retail banking, corporate? Then you can also look at the products. You can go deeper into the products. We provide credit, we provide etc. So I found that a bit misplaced.
Thank you so much for that feedback. However, while we're coming up with this business description, we mainly looked at the two subsidiaries, that is banking and non-banking subsidiaries, considering that CRDB has both the non-banking, those are the subsidiaries in Burundi and Congo, while in the non-banking we have the insurance company and the CRDB Foundation. Together, while describing the shareholding of CRDB Bank being part of the business description, we looked at the various shareholders, including the Danida Investment Fund, which has the highest shareholding of 21%, and then the PSSF Pension Fund with 13.30%, and our very own National Social Security Fund, NSSF of Uganda, having 7.5%. We did not look at the products because at the end of the day, we thought it was wise to look at the bigger picture of the business, that is the banking and non-banking subsidiaries, looking at its shareholding and also the market share on the next slide.
Diving deeper on what my colleague is saying, what came to our mind when we saw a word business description specifically? We had to look within CRDB PLC before specifically looking at the industry. When you look at the company, it has both banking and non-banking subsidiaries. You've talked about the products. These products are offered within these subsidiaries. Let me talk about the non-banking subsidiaries specifically, which is CRDB Insurance Company, which is offering different insurance products. And CRDB Foundation is also embarking on corporate social responsibility initiatives specifically. So when we are talking about business distribution, we should just look at the different segments within a company and also describe which products are being provided by such segments, looking at the insurance, the CRDB Foundation, and the banking subsidiaries and the different products they're providing. Thank you.
In addition to that, quite a number of products that they have. They have a number of agency banks, banking agents across their subsidiaries. They have a number of branches. They have ATM machines. And I can just pick out one of their key products, which is SIM banking. SIM banking operates so much like MTN mobile money in Uganda. It's one of their, I can say, distinguished products because it's the one that is championing the financial inclusion. And then it also doesn't have, you don't need internet to be able to use this service because you're using USSD. This is maybe just to add on more on the products.
So basically, I would like to give you a hint. Whenever you are going through the banking sector, there's a couple of aspects that you need to look at. We have the interbank lending rate, and we also have the lending rates in the banking sector. The business of a bank is making money through issuing loans, right? Yes. Yeah, so I haven't seen you guys talking about the Bank of Tanzania, BOT. It's in Tanzania. So the BOT, you need to factor in the monetary policies, the fiscal policies that have been put in place. As much as you guys are viewing the risk as a whole, yes, check what the government is doing to improve the economy. Yes. Apart from that, on presentation-wise, yes, you guys are quite audible and all, but you don't need to be too audible as much as you're audible. Yes. It might come out as overconfidence or you're trying to hide some facts behind the voice, yeah?
Thank you so much for that feedback.
But otherwise, you're good. Like the way you guys have come back with a lot of energy. You guys have switched it up, yeah? It looks nice, yeah? Thanks so much.
Thank you so much.
Thank you very much, Team N. Next, we'll have Team C.
Good afternoon, ladies and gentlemen. My name is Rose, together with Paul, Modern, Irene, and Arnold. We are Team C, and we are your analysts for CRDB Bank today. We are here to unveil our analysis that gave us a buy recommendation for CRDB Bank. We initiate a buy rating for CRDB with a one-year target price of 775.99 Tanzania shillings, representing an upside of 19.38%. We want you to strike the iron when it is hot. Here is a snippet of our CRDB Bank. In 1996, CRDB Bank was incorporated in Tanzania under the Companies Act. In 2002, it was the first bank to introduce debit cards in Tanzania. It then took CRDB Bank 13 years to be listed on the DSE. That was in 2009. In 2012, it was further extended to Burundi. In 2016, it was the first bank to receive credit rating. In 2021, it participated in the UN Green Climate Fund. In 2023, it was launched in Dar es Salaam. It is noted that the banking sector of Tanzania represents 70% of the financial sector. 42% is represented by CRDB Bank. The share price of CRDB Bank has increased by 41.30%. The share price has increased by 41.3%, and ever since our valuation date, the price has increased by 3.08%, reaching 670.00 Tanzania shillings as of January 24th, 2025. Ladies and gentlemen, the business overview of CRDB Bank was not incorporated in our work, but it runs several insurance business lines, investment business lines, among others. CRDB Bank today, in conclusion, leads by assets, deposits, and customers. Modern, come and take us through the industrial and market overview.
Thank you so much, Rose. Looking at the industry and market overview, we look at the major macroeconomic indicators of the Tanzanian economy. Tanzania is the most populous country in East Africa with a population of 67.44 million people, providing a large domestic market. Tanzania also has a stable inflation of 3.8%, and this has been projected to remain stable at around 3.24%, of course, reflecting stable inflation. Look at the GDP in our last graph on the last slide. Look at the GDP of Tanzania. Tanzania has had a GDP growth rate of 5.6%, obviously. And when you look at the Tanzanian shilling, it has accumulated by 8% year over year, reflecting a stable inflation, reflecting a stable price movement. Ladies and gentlemen, on the next slide, we also looked at the competitive advantage of Tanzania using Michael Porter's 5 forces of analysis. And with that, we can actually see that the economic growth of Tanzania, we expect it to boost the banking sector, supporting CRDB's key growth drivers. Irene will take us through the investment analysis.
Thank you, Modern. Our buying rating was supported by 3 strong key drivers, one being the strong revenue growth and profitability, driven by the increasing interest income as well as the expanding loan book. Earlier, as I said, the loan book grew from Tanzanian shillings 3.93 trillion to Tanzanian shillings 8.44 trillion, and we project it to increase up to Tanzanian shillings 8.95 trillion due to the strong credit demand. The interest income grew by 27.09% in 2023. This is due to the expanding loan book, but we're lucky to say that CRDB's net non-performing loans have reduced to a ratio of 2.6% from the post-COVID, which is even below the industry performance. Then we look at the significant growth in deposits and liquidity positions at a 4-year average rate. We see that CRDB's deposits grow at a 14.56% due to the increasing trust that the citizens have in CRDB Bank. We also see that these increasing deposits help our liquidity position to be well so that it's able to fund its loan portfolio as well as at lower costs. We have the robust divestment assets and investment portfolios. CRDB has quite a number of investment portfolios that include, we have the government securities, debt instruments, and they're there to reduce the risk exposure, as well as the total asset value of CRDB, which is
2.9 trillion as per 2023. Paul, come and take us through ESG.
So as any other bank in Tanzania, we see that CRDB Bank has been able to incorporate ESG in order to achieve the sustainable development goals. Here under environment, we see that it has been able to have waste recycling while partnering with the recycler and has been able to promote SDG 12. Then it has created climate awareness and tree planting through the Pendezesha Tanzania campaign that has supported SDG 13 for climate action. It has also been able to partner with the Green Climate Fund and secured over 225 million Tanzanian shillings that has supported sustainable farming in Tanzania. Then under social, we see that the CRDB Bank has been able to include women and youth in its financial system that has been able to increase its customer base by 4 million people. This is justified by the award that they received in 2023 by the Global Brands magazine of the most trusted brand in Tanzania. Then under governance, we see that as of the 2023 annual report of the CRDB Bank, they stand at 14 members of the board of directors that have experience of over 200 years that has enabled them to make strategic decisions and have efficient management in the bank. Then it has also been able to promote gender diversity as of wanting to achieve 50-50 gender ratio by 2027, but currently standing at 56-44 male to female, which helps to advocate for SDG 5, gender equality. Then it has also been able to be transparent and accountable to its shareholders and customers, where they were awarded the best presented financial statements by the National Board of Accountants and Auditors in 2023. Arnold, take us through the financial analysis.
Thank you so much. Under the leadership of the CFO of CRDB Bank, Mr. Frederick, we assessed the financial performance of CRDB by looking at the following: profitability, liquidity, and its asset quality. Under profitability, ladies and gentlemen, profit growth, net interest income grew at a rate of 17.6%, and also PAT grew at a rate of 20.31%. What does it mean? It means that CRDB Bank manages its interest rates and loan portfolio effectively. That helps it to increase its profit. Then also we looked at two important metrics that show how the bank uses its assets to make money or to make its stakeholders really happy, by looking at return on assets that grew at a rate of 3.17%, and return on equity that grew at a rate of 23.33%, and we also anticipate for more profitability ratios, hence boosting our upside rating. We also looked at liquidity. How easy the bank can access cash when it needs to sort out short-term issues. And we found out that CRDB has a resilient and strong liquidity foundation. What am I trying to say? CRDB Bank cash and balances increased from 700 billion to 1 trillion in 2023, reflecting a solid liquidity management, which means that CRDB can meet any obligation as and when it falls due. We also looked at robust cash flow that comes from its operations, which increased at a rate of 388.31%. We also looked at asset quality, ladies and gentlemen. CRDB invests in healthy assets, whereby its assets has grown to 13 trillion as of in 2023. We also anticipate high aggressive growth in 2024. Ladies and gentlemen, Modern take us through evaluation.
Thank you so much, Arnold. In our evaluation, of course, we used the CAPEM to come up with a cost of equity. Like earlier advised, we noticed that we used a 1-year Tanzanian government bond, which does not cater for long-term returns. However, in our excess return model, we incorporated a 10-year Tanzanian bond to cater for the excess returns. We cannot help but notice that we shall have, of course, to adjust our risk-free rate to cater for long-term returns. Obviously, in our excess return model, we looked at the two growth phases that we expect CRDB to go through. That is to say, the high growth phase and the low growth phase. Ladies and gentlemen, we looked at excess return model to provide the intrinsic values. By intrinsic values, of course, I mean the exact values while valuing CRDB Bank, and we were able to come up with a target price of 695.51 per share, representing an upside of 7.00% from our valuation price. Later on, we also used the relative valuation model, of course, looking at our key multiples, that is to say, the price to earnings ratio and the price to book value. The price to earnings ratio gave us an upside of 11.13%, representing an upside from our valuation price. And this upside potential is likely driven by CRDB's robust earnings growth relative to its peers, reflecting a strong profitability and strategic positioning within the regional market. Ladies and gentlemen, with that, we had on weighting the three target prices. We got a target price of 775.99 Tanzanian shillings, representing an upside from our valuation price. Irene will take us through the risk analysis.
Due to time, we shall just see the risk matrix that has we have the liquidity risk, market risk, operational risk, as well as the compliance risk, but is mainly affected by the credit risk. Ladies and gentlemen, once again, I emphasize a buying rating for CRDB with a 1-year target price of Tanzanian shillings 775.99, representing an upside of 19.38% due to our strong key drivers by CRDB. Strike while the iron's still hot.
So mine is to just hammer you. There's a good flow for you guys under the history. I like the way the presentation looks and the confidence has come up again. But now, you guys have something under the loan book movement. You guys expect the loan book of CRDB Bank to grow by 127%. Yeah, from 3.93 trillion to 8.95 trillion. So, and you say that this will be driven because of strong credit demand. Kindly related to the economic growth and all.
We mainly saw that it's agriculture that's mainly taking up Tanzania, and those people need the loans. Like even from the research we made, we saw that mainly the retail sector that includes agriculture, the SMEs, they're the ones that do what? Mainly get the loans. And we see that credit demand, that loan book will be able to go up to 8.95 trillion. This also is going to encourage the interest income. I'm just supplementing. This is also going to encourage the interest income. From the post-COVID, we saw that the non-performing loans were 5.5%. But from the post-COVID up to today, we see that it's reducing to 2.6%. Yeah, which is even below the industry value, because the industry value is 5%. Hence, this will be able to also help CRDB.
Ladies and gentlemen, loan book growth, what does it mean? This is a bank whereby it makes its, like the profit, more of the profit the bank generates, it comes from the deposits. So the more people deposit, so it means bank uses those deposits to give loans to the people. Hence, when the bank gives more loans to the people, it means it is going to bargain for a low interest to me, the depositor. Then maybe it charges a higher interest to the person who is taking the loan. So the difference, that is the profit of the bank. That's why the net interest income are rising on a year over year. Simply like that.
Okay, that's good. You projected the growth on interest income. I would also want you to project the interest expense. Don't look at it as one side. As much as interest income is going up, also check the expenses which go hand in hand with the income. Also, I would like you to go and refer to the Global Index Business Optimism and see what they gave under the projected growth of the economy.
Okay.
Yeah, nice.
Thank you, sir.
Thank you very much, Team C. Next, we'll have Team E.
Good afternoon once again, ladies and gentlemen. My name is Oriekot Cornelius, and we are Team E, as they have said. Here with my colleague Goodman, Anita, Nami Gloria, and then the one and only, the man who is always happy even when things seem not to be happy, Andrew. Ladies and gentlemen, we are here to give you our view of our financial analysis after we have done, and we issue you, ladies and gentlemen, a buy recommendation with a target price of 849.87 Tanzanian shillings, which gives us an upside of 26.85% from the closing price of 670 as of 5th January 2025. Our buy recommendation is pioneered by 4 main catalysts, which are digitalization and innovation, asset size and large market cap, regional brand, and then its future development plans, which is the long-term strategy from 2023 to 2027. Now, when it comes to digitalization and innovation, CRDB Bank Tanzania appreciates technology so much. As we have seen it launching what they call the digital customer service system, okay, that utilizes AI called LA, which enables it to easily, okay, connect with the customer. And this LA has enabled it to increase a KGR of 12.6%. Additionally, we are seeing CRDB Bank as the only local bank in Tanzania that is existence in 3 different countries. That is Tanzania, Burundi, and recently in 2023, that is Congo. Also, it enjoys a large market share in terms of asset, and when we are seeing it that it owns 27%. Look at it, 27% out of over 44 commercial banks in Tanzania. That gives it a very big hand, and that's why we are offering a buy recommendation to you people. Over to you, my sister, to tell us what the overview of the industry looks at.
Thank you. With business overview, CRDB Bank is a full-fledged commercial bank, first founded in 1984 as CRD Bank of Tanzania. It became CRD Bank Limited in 1996 after privatization of state-owned firms by the Tanzanian government. It was later listed in Dar es Salaam Stock Exchange in 2009, and it is enjoying a customer base of over 5 million customers. Ladies and gentlemen, it is, as a group, CRDB Bank Limited, it is currently present in 3 countries, that's Tanzania, Burundi, and DR Congo. Ladies and gentlemen, when it comes to business model, CRDB Bank, it operates under 3 main segments, that is corporate banking, retail banking, and treasury. And recently it launched bank assurance in 2023. Ladies and gentlemen, these segments posted 424 billion in profit after tax in 2023. Thank you. Over to you, Gloria.
When it comes to industry overview, CRDB Bank operates in a resilient economy with a remarkable consistent growth. The GDP grew to 5.2% in 2023 from 4.5% in 2022. The inflation rate reduced from 4.25% to 3.8% in 2023, and it is further expected to reduce to 3% by 2026, and this will be due to stability in food and then prices of energy, and that will make CRDB in a position that it will make high profit. When it comes to industry overview, CRDB is well capitalized, profitable, and stable, and it's well capitalized, profitable, and stable. The total asset as of 3rd quarter 2024 stood at 60.28 trillion, with 77% controlled by the largest top 10 banks, with the rest of the percentage controlled by other banks. When it comes to CRDB, also witnessed improvement in the loan quality, whereby the loan quality stood at 5.6, with the average non-performing loan ratio stood at 5.6%, suggesting relatively good quality. We also analyzed CRDB Bank competitive position using Porter's 5 forces, whereby we rated it on a scale of 1 to 5, where 1 shows low threat of entrance to CRDB Bank because of high because of high capital requirement and regulations to join the industry. Then also threat of substitutes and bargaining power of consumers were high because of many financial services in Tanzania.
Ladies and gentlemen, our financial analysis was based on 4 metrics, that is profitability, capital adequacy, asset quality, and liquidity, together with earnings quality. For our profitability, we noticed that the net profits of CRDB Bank have been increasing consistently over the past few years and are projected to continue doing so. This is due to loans repricing and risk management, and also increased credit lending. And these total assets have also been increasing, registering a 17% cumulative average growth rate over the years. That shows that the total assets of CRDB Bank have been extensively increasing in number, even going abroad to the countries that it invests in. The non-performing loans ratio has also been decreasing consistently. If you notice, in 2023, it was at 2.80%, which is way below the threshold of 5% as a minimum the threshold. And this shows effective credit risk management. When we go to liquidity, you see that they were so high consistently over the past 4 years, except in 2020, which was due to COVID-19, but still it was able to make profits and huge profits. That is why you can invest in it. It has high liquidity. That means it has enough money to run its operations, and it is able to pay off short-term loans. For capital adequacy, we noticed that they have been high, above the minimum regulatory requirement of 14.5% in total capital ratio, as we recorded in 2023 as 17.38%. Ladies and gentlemen, on earnings quality, we noticed that our returns on equity and returns on asset have been so high, also showing high profitability. Ladies and gentlemen, allow me to invite Mr. Kone to take you through valuation.
Thank you so much. When it comes to valuation, we valued CRDB Bank based on what we call weighted average, where it gave us a target price of 849.87 and an upside of 26.85%. And the weightings were 15% for RIM, DDM 30%, and comparative valuation weighted it at 55%. But as advised earlier on that we overweighted using comparative valuation, we are going to go back and rework on that because it is short our target price a little bit up. So when it comes to the DDM, okay, when it comes to the DDM, the assumptions are that the DDM, we have dividend growth in period 1, which is 10%, and in period 2, which is 11%, a risk-free rate of 11%, the bit of 0.48, and the cost of equity of 16.17. But at the end of the day, it gave us an implied share price or target price of 1,327.3, which clearly shows that CRDB Bank is undervalued. Similarly, we also use the residual income model to assess the profitability level of CRDB Bank, and it gave us a very close target price to this one of 1,313.3, which also clearly shows that CRDB Bank is undervalued. And then finally, we use the comparative valuation model, where our comparables were 3. The local peers in Tanzania, the regional peers, and then the African peers. But again, as advised earlier on, that when you're doing this comparison, that we don't need to put in those banks that are doing so well, okay, the other African banks, we needed to base our analysis on the local banks in Tanzania, as he had advised us, not the banks in South Africa, because it's a developed country, unlike TZ. So we're also going to rework on that. But it gave us a price to earning average of 3.62, which my brother Ofondo earlier on said that how do we come up with a price to earning ratio? Okay, we compared that one with for the industry as of 31st January 2025, which stood at, not for the industry, but rather for CRDB, which stood at 3.3, but for the sector was at 9%. Over to you, Gloria, to tell us, does CRDB Bank consider ESG?
When it comes to ESG, it aligns ESG in line with Sustainable Development Goal, and its agenda is on two main factors, that is ESG and climate fund. Under climate finance, it focuses on mobilizing finances and implementing projects. When it comes to environment, it focuses on reducing carbon emission and reducing paper usage. When it comes to social, it provides capital to vulnerable groups and SMEs. When it comes to governance, it is governed headed by CEO, that is Mr. Abdul Majid, and then the composition of the board is 83 to 17%, the foreigners 8 to 92% of the nationals, and then in terms of employees, it has 56 males and then 44% female.
Despite our buy recommendation, despite all those reasons for our buy, we believe the bank has got some risks. A risk matrix was conducted to assess the likelihood and the impact of such risks on the bank. We realized that economic and geopolitical uncertainties and cybersecurity do pose a higher impact. If at all any of them do happen at any time, it will be a bigger damage to a bank. We later looked at credit risk and liquidity risk. These do have a higher frequency anytime they can happen. However, you shouldn't worry. Your investments are protected by CRDB Bank through mitigating these risks. All the credits have been issued, and the microeconomic and geopolitical uncertainties have been worked on through diversifying the assets of the bank into different economies, as you've heard. Based on the four categories that were listed earlier, we issue a buy recommendation. Invest in CRDB Bank for your future development, a bank that listens. Thank you. Asante. Over to you, judges.
So basically, I know you guys have been shortchanged by the machine going off. I noticed you guys are not able to freestyle your project whenever you're not seeing it. You told us, ladies and gentlemen, like 7 times. You need to have it. It might happen, maybe if you move to the global, it might happen there, it goes off. You don't need to repeat it several times. Be confident, go through with whatever you know. So apart from that, the issue on non-performing loans. Whenever you're talking about the non-performing loans, try and relate it to the provisions to show you understand what you're talking about, because this affects the profitability. Whenever the non-performing loans reduce, you also reduce your provisions. Yeah? Okay. Also, everyone is not touching on something that is key. In 2019, we experienced COVID-19. It was an unexpected pandemic. It hit the financial sector very hard. So you need to factor in a little bit of virus or something else coming up. We had China had a recent virus, and AI is also evolving. Factor these new things on your presentation to show you are relating it to modern things, not just the basic, the not performing loans, the GDP, the inflation. Work something out. Do be different. Yeah, thank you.
Thank you.
No, I think I would like to commend you, just as my colleague Steve has mentioned. I think, okay, you mentioned ladies and gentlemen several times, but also you are brave enough to continue, isn't it? So I think that's also something you need to, because you didn't expect it, did you? No, you didn't. Yeah. Then my other comment is in relation to the comparables. I know my colleague Dixon had mentioned that it's important for you to use banks that are in Tanzania. He's right, but don't take that as something that's cast in stone, because you may be dealing with an investor from a different country. Perhaps maybe it's a South African investor as well, right? So he will also want to know how are Tanzanian banks performing against South African banks, right? And then also, so be open, but just know that keep it as close as possible to what you're actually looking at, so that it's relatable. So if it's a Tanzanian bank, then preferably you start by comparing it to Tanzanian banks, right? If it's an Ugandan investor, you may also be interested in looking at how those banks in Tanzania are performing against Ugandan banks, yeah? Or if it's an investor who is interested in the East African region in general, he may be interested in knowing how are the Tanzanian banks performing against the Ugandan banks, the Kenyan banks, etc., right? And for some industries, you may not get immediate comparables. So let's assume it's a what? It's a rocket space company that is setting up here in Uganda. Are there any rocket space companies here in Uganda? None that I am aware of, unless maybe you're telling me Kira Motors has started going to space. That's a joke. But what I'm trying to say, so then in that case, you'll have to consider maybe Europe and the US, and then you be creative in how you can relate it to the Ugandan market, of course, right? So there will be some discounts you'll have to apply, etc. Yeah. So you have to be. Valuation is both a combination of a science and an art, so you have to use your art in that sense. Okay? Yeah. Thank you.
Can I say something? Yeah, sure. Just to clarify, I did not say that you should only compare with Tanzanian banks. If you got me right.
Yeah.
Okay. What I said was you need to have comparators, okay, that are almost similar. Okay. So if you compare a Kenyan bank to a Ugandan bank to a Tanzanian bank, okay, the environment is almost similar. Okay. And what I said was that South Africa might be a bit of a stretch, yes. Depending on the audience, you can bring in South Africa, but starting with probably Tanzania, Uganda, Rwanda, the environment is almost similar. Okay, so if you get comparators from those countries, what you get is likely to be quite reflective. Okay, so I did not say that you should not compare with banks outside Tanzania. Okay, so let's get that.
Thank you.
Just to add on the comparative, when you're comparing, what Dixon says when he's saying compare institutions that are similar. For example, you have CRDB, that is the second largest. Is it largest in Tanzania? Largest, and it's opening up in other markets, right? And then you come to Kenya and you have Equity Bank, that is, I think, second largest, I'm not sure, opening up in other markets as well. Similar markets to where CRDB is opening. Good comparison. They are both local banks that are expanding. KCB in Kenya is also a Kenyan bank that has expanded to Uganda, I think, at least I know Equity has expanded to DRC. KCB is in Rwanda, so it's also a good comparison for CRDB because it's also expanding, you understand? So you wouldn't, for example, get CRDB and compare it to, no, I don't want to mention names, but you understand what I'm saying, right? Like it's a very big bank, and then you get and compare it to the smallest bank in the industry and use that as a PE sort of valuation. That's not a comparable bank to use in that kind of setting if you're using valuation method, like that comparative valuation methodology. That's just something to note going forward when you're doing this kind of work.
Thank you.
Thank you very much, Team E. Next, we'll have final team, Team G.
Good afternoon, everyone. All protocol observed. This is Group G. My name is Justine. I'm with Letitia and Nambwera. We are here to present to you about CRDB Bank, Tanzania's largest bank by assets. we initiate a buy recommendation with a target price of 801 Tanzania shillings at 21.4 upside, supported by strong financial performance of the bank and a favorable market positioning. The bank is listed on the Dar es Salaam Stock Exchange. It was established in 1996. It has approximately 6 million customers, and it holds 27% of the market share in Tanzania. It has an extensive nationwide branch network with over 226 branches, 690 ATMs, and 35,000 agent outlets. Furthermore, it has diversified revenue streams of corporate banking, retail banking, and treasury, with retail banking making up 67% of the group revenue.
The banking sector of Tanzania is a critical component in the financial system of the country. This is due to its growth and resilience. Additionally, by October 2024, Bank of Tanzania registered 46 financial institutions. Among these were 34 commercial banks where CRDB falls. This is looked at as a growth trend. Another thing, we looked at Bank of Tanzania as the regulator of the industry, giving all the policies followed by the institution, which gives it its growth and stability. Profitability of the industry is seen as growing day by day, given the sector's average rate on equity of 15%, which was registered in 2023, vis-a-vis 19.8% for CRDB, which shows a great performance of the industry. Additionally, we also looked at the competitive landscape, where we analyzed the industry using Porter's 5 forces model. And in this, we saw the industry as competitive, given the fact that the industry is dominated by basically 3 major players, and that is CRDB, NMB, and NBC. Therefore, these cannot charge higher prices due to fear of losing market share. And another thing that we looked at is the threat of new entrants, which was moderate due to the regulatory compliance requirements, and the power of buyers was high because of the low switching costs. Thank you.
On to the valuation methodologies. We used the 4 methods: the discounted cash flow, dividend discount method, residual income method, and the relative valuation. We derived a weighted average price target of 801 Tanzanian shillings, but as per the previous presentation, we'll edit and focus on the 3 methodologies: the dividend discount, residual income, and relative valuation. For the dividend discount methodology, the assumption here was a strong dividend history as evidenced in the financials. For the residual income, we saw sustainable residual income as shown in the financials. And for the relative valuation, we based on 2 other banks within the Tanzania market, that is NBC and NCB, NBC and NBS. And then for the cost of equity, we used the capital asset pricing model. For the cost of debt, we used the Bank of Tanzania CBR rate of 6%, which we adjusted for tax of 30%.
CRDB share price in 2019 reduced from 135 to 95 to 95. CRDB Bank's share price in 2019 reduced from 135 to 95 Tanzanian shillings because of the high non-performing loans and the market leadership. This, however, has recovered with an increase in earnings per share by 49.1% and asset growth of 15.09 trillion. On to the financial analysis, CRDB's revenue mix in 2023 was made up of 54 retail banking, 26 corporate banking, and 20% treasury. CRDB Bank in profitability registered a 5-year CAGR of 12.6%, and this is projected to increase to 18.8%. When we talk of the interest income, we cannot not talk about the stage 3 credit impaired assets, because these are the basis of non-performing loans, and also they increase the expected credit loss which affects the profitability of the bank and the bottom line. On to the industry comparison, TRDB Bank is a strong competitor in the industry, registering a 24.2% return on equity and a 3.2% return on assets vis-a-vis its major competitors like NMB Bank that have 25.9% and 4.4% in return on assets and return on equity. This means that the industry measures are able to invest shareholders' equity and also their assets to generate income for their shareholders, maximizing shareholder value. The net interest income trended downwards because of the macroeconomic landscape. And it reduced to 2.8% between 2019 and 2023. We project a slow growth, however, of 0.7%, but remaining cognizant of the inflationary tendencies that are in the global economy. When we look at the gross loans and advances, CRDB Bank has increasing gross loans and advances. However, they are increasing at a reducing rate, with 32.8% in 2022, reduced to 18.7%. This is projected to reduce further to 4.4% because of the customer deposits that have reduced to 3.2%. Net performing loans reduced from 5.73% to 2.45%, which is below the regulatory limits, which is 5% in 2023. CRDB Bank registered a 16.07% Tier 1 capital ratio and a 17.45% in capital adequacy ratio, which means it is well capitalized to absorb losses and also protect customer deposits. Onto the loan deposit ratio, it increased from 68.7% to 98.1%, implying that most of the customer deposits are given out as loans, and this is projected to increase to 110.5%, which may cause a liquidity concern. However, due to the capital adequacy ratio, CRDB will be able to borrow money at low costs to finance its loan portfolio. On to the cost efficiency, it reduced to 51.5% because of the growth in the net operating income, the digitalization, like the launch of the SIM banking app, and the USSD and improved loan portfolio. We forecast a further decrease to 31.2% by 2028. Finally, CRDB Bank is well positioned to a sustainable growth due to its strong asset growth and leadership in retail banking.
The analysis will be incomplete if we don't talk about the risks and their mitigants. Among the major risks, we have the market risks, which may include the credit defaults and cybersecurity threats. We also have the regulatory risks as well as the climate-related risks, and these should not scare investors because there are specific mitigants such as emphasizing digital transformation, which can help to overlook such risks.
To build on my colleague's point, the bank focuses on environmental, social, and governance aspects in order to unlock value for its key stakeholders. In 2023, the bank introduced the Kijani Bond, which was to raise sustainable finance in Tanzania. It got the UN Green Climate Fund accreditation, where it supports smallholder farmers in climate adaptation. On the social aspect, the bank raised 309 billion shillings for youth programs, and it also organized a marathon to help women, young mothers, and it has a staff composition ratio of 46% females and 54% males in order to meet the diversity and inclusion strategy.
On to governance, CRDB has been evaluated on 5 factors: board of directors, which is made up of 12 members, 9 NEDs and 3 INEDs, top management, which is a 15-member board, and it's including the company secretary, shareholder rights, which gives the shareholders rights to vote and dividends, transparency, where CRDB publishes quarterly reports and also audited annual reports. On sustainability, CRDB was evaluated on the 4 Ps: people, planet, prosperity, and partnerships. In conclusion, CRDB Bank is well positioned for growth with robust risk management and sustainability focus. And with this expansion plan to Asia, Uganda, Comoros, and Zambia, we reiterate a strong buy recommendation at 801 at 21.4% upside potential. Thank you so much. We can now take questions.
For me, just I can add on to something. I can teach you a way of selling propaganda. Yeah? You see, whenever you're talking about the share price dipping and whatever, you can sell it to someone and be like, okay, at that time, the Uganda shilling was trading at 19 shillings at that time, and like right now it's strengthened and it's worth 28 bob, right? Yeah, sell propaganda to the judge and so that he knows you have something.
We wanted to show the recovery.
Yeah.
Because the recovery was very phenomenal, up to over 690 Tanzania shillings from 95. So we wanted to show the trend and recovery.
That's nice.
Yeah.
Thanks so much.
You're welcome.
Thank you very much, everyone, for your active participation so far. And a very big thank you to our judges for your continued mentorship and all those comments to the teams, including the tough questions. We appreciate them. We will be breaking for lunch for, I think, 30 minutes, if possible, as we tally the scores that have come in. And then when we come back from lunch, we will be announcing the best two teams that will face off for the winning prize or for the winning title. Is that okay? All right, thank you so much. We'll be serving in about 10 minutes. So feel free to stretch a bit, use the washrooms. We have washrooms on this side of the auditorium and also from the other side. And then we'll have lunch and converge back in about 30 minutes. Maybe we'll start at 3:40. Thank you.
Also, Heading for the final round.
Was incorporated in Tanzania under the Companies Act. In 2009, after a period of 13 years, it was listed on the DSE. In 2016, it was the first bank to receive credit rate. 2021, it participated in the UN Green Climate Fund. In 2023, it was recently launched in DRC. CRDB Bank's share price has increased by 41.30%. Since our valuation date, the share price has increased by 3.08%, reaching 670.00 Tanzania shillings as of January 24th, 2025. CRDB Bank has several products, for example, investment, and it has invested in different activities like agriculture, and it has several products like insurance. CRDB Bank today leads in deposits, customers, and assets. Modern, come and take us through the industrial and market overview.
Thank you so much, Loz. Looking at the industry currency formula, of course, looking at our graph, it has from 2,300 against the dollar. Ladies and gentlemen, Tanzania has a stable investment environment compared to other countries in East Africa. And Irene will take us through the risk analysis, the investment analysis.
Thank you, Modan. Our buying rate was supported by three key drivers, one being the strong revenue growth and profitability, which is driven by the growing interest income as well as the expanding loan book. From our previous sessions, we've seen that the CRDB's loan book has tripled from Tanzania shillings 3.93 trillion, Tanzanian shillings 8.44 trillion, and we are assuming that it will expand to Tanzanian shillings 8.95 trillion due to the strong credit demand. From our previous speaker, talked about the interest expense. As per the fourth quarter of CR, the total interest expense totaled up to Tanzanian shillings 378 to minimize these costs through the medium term. We also see
6%. You understand? So the risk, the equity risk return, it is that excess that you get from where you're given 2% and you bring it where I'm giving you that excess of 4. You understand? What am I trying to mean? This is where the microeconomic indicators come in. Ladies and gentlemen, for example, right now, I can't convince you to go to CRDB Congo right now because the chaos right now in Congo, it's too much. No one can be willing to lose his money just like that because there's no political stability. Ladies and gentlemen, the most powerful, it is inflation. If I get a loan of 100 million and the bank tells me that you're going to pay back 200 million, I cannot take that money even if I'm going to die. Where are you going to get that money? Because the interest is too high. That's why the microeconomic indicators matter a lot when it comes to this banking, because banking is one of the riskiest business. You understand? However much you assess the credit worthiness of the customer, all those 5 C's you apply them, but the political state can refuse or can stop the customers from coming to pick that money. But once the inflation rates, maybe the interest rates are high, are low, people are willing to come and take more money because they are convinced to come and use the money because they can affordably, without forcing or straining the muscles, they will pay that money back. It is not easy to borrow the money from the bank and then you run away to another country. People run away every day because they are deceived to take the loan at a high interest of which they cannot be able to pay back that money. That's why the macroeconomic indicators really come in to help us have a stable banking sector. Thank you so much.
Can I make a comment? I think his question was, what didn't come out in your presentation is the nexus between the macroeconomy and the valuation, okay? So a case in point, if GDP is growing at 10%, what does that mean for the bank in terms of ability to lend credit in terms of non-performing loans? If interest rates are low, what does that mean when it comes to net interest income? Okay, I think that is a kind of connection he's looking out for.
Okay. Yeah. So if I'm to connect that, thank you so much. If the GDP is growing really, it means that the country is performing so well in terms of producing. So which means if the GDP is growing, it favors, because GDP looks at the whole population. You understand? It means when the GDP is increasing, the population, they're having money. You understand? Which means if the GDP increases, the people that accesses loans, they will be able to pay that money. And the interest, if interest loans are low, it's like waking up in the morning and Bank of Uganda says, let the interest percent be favor me as a consumer, but the business owner, if it is like Central, or in case if it is CRDB in this case, if the president of Tanzania wakes up and says that let's reduce that to maybe to 0 point something, like the way how the money lending in Uganda, it is now 0.28. People are now, they can't give the loans out because the rates are low unless you really want to take up that loan. You get, that's the effect, that when the interest loans really are low, it means on the side of the consumer it is better, but on the side of the bank, it is not going to make that money. Otherwise, this is the same thing that I can cooperate in. If CRDB takes my money as a depositor, it is going to give me an interest rate. Then, if Mr. Modern comes to take up that same deposit, CRDB is going to incorporate a certain rate also. That's where their profit is coming from in terms of income, the interest-bearing assets and the non-interest-bearing assets. Then, which means their profit will grow. As your question was, that where does this profit come from? From our analysis, that's where we got the profit coming from as per now. Thank you so much.
If you're to look at COVID-19, the economic activities were low, and that means every producer was wanted to obtain profits. That's why they hiked the prices. But after the COVID-19 period, we see that things are starting to go back to normal, hence reducing our inflation. And that means if the inflation is low, many people are willing to money from the bank, hence increasing their loan book as well as also the deposits. And we also projected that the inflation to be stable around 3.24%, which will help CRDB to maintain its loan book growth as well as the deposits and liquidity position.
Thank you, Team C. Thank you for that effort. However, what you need to do in the future, you need to think of macro in terms of headwinds and tailwinds. So every time you're looking at a particular company and you look at the macro environment, you really have to make the connection about what those macros or your macro predictions are going to do for that particular business model and that industry. So think of it, use the tailwinds, the headwinds, present tailwinds, present headwinds, and that aspect. And for macros, particularly for a bank, banks are very sensitive to interest rates. Yeah, so the asset and liability side are affected by interest rates. So you really have to emphasize what the interest rate environment is going to do for that bank. Yeah, so you best stress it against different interest rate scenarios. If interest rates went up 5% in Tanzania, what does that mean for banks in general and CRDB as a bank? So that's the sort of thing you have to bring out. Yeah, but thanks for the effort. Maybe just before my other judges come in, on the valuation you did, you posed an upside of about 19%, right? Yeah. And you rate it buy. You had a buy rating, right? Where are long-term interest rates in Tanzania right now? Okay, the point I'm making, they are between 14 to 15. So the point I'm making is, does that look like a buy rating to you? If I could get 15% in treasuries over the next 12, why would I buy an equity and potentially 19%? That is if everything you've said is correct and pans out as you hope. Yeah, so my assessment, I don't know about the other judges, I don't think that justifies a buy, in my opinion. Yeah, I don't think that's high enough for a buy. Do you have anything to say to that?
Probably, maybe, if I'm to answer you, sir, allow me applying the effect that we assume that because right now this is a stock price, whereby we normally face such kind of issues, where you find that the stock today can increase, the stock price can increase, and then tomorrow it reduces. Those are the things that we talked about, that there are no market anomalies. That is something you cannot control. You understand? If the stock market closes today, if it is a Friday, trust me, on a Monday, the price will lower. That is a market anomaly. You cannot control. The fact
and you have to look at it in comparison to the available returns that are in the market. So my point is that, is 19% high enough to call it a buy? Probably not, but that's what I wanted you to convince me.
Yeah, probably, but looking at, of course I will agree with you because you have more expertise than me. That is honestly telling. You have more expertise than me. But our rating, it shows from the price check on the DSA, the stock price is now 690. Our target price was 775.99. So for us, we take that upside of 19.38 as a buying recommendation, sir. Because of our expertise, the little expertise that we have, a lot of expertise.
Okay, can I just make a comment? Can I make a quick comment? And thank you for that. Joe, thank you for that as well. The thing about valuation, okay? Valuation is not an exact science. It's not an exact science. And you might have analysts having so many varied opinions as to what the target price is. But just to respond to Joe, if the upside is 19%, that's on the price, I'll probably be interested to see what the dividend yield would be so that I can compute a total return, okay? So that's one of looking at it. The second, the ROE, the trend in ROE, to see whether that trend in ROE can justify my investing in this particular stock. And again, if I look at the, what is called, I think, if you come across the word moat, okay? If you look at the moat of this particular counter, what are the competitive advantages, okay? Is the growth story compelling enough? Is the market positioning compelling enough? I think, to me, it's quite compelling. So I would respectfully disagree with Joe. Looking at the total returns, that is both price appreciation as well as the dividend yield, I think you might be onto something.
Yes, I would just like to give a word of advice. You know, you have all the answers that you're being asked. It's a matter of composing yourself and try to put your answer to about 2 statements. The moment you start explaining and telling us, oh, they will take deposits from where and put where, come on, you're deviating from the question. Try and put your answer to 2 statements. If it's not direct, ask the judge to come again. Kindly, what was your question? Yeah, don't go around. Eh? He's listening.
Thank you very much, Team C. Next, we'll have Team G.
Institutions, and among these, 34 were commercial banks where CRDB falls. Looking at the regulatory environment, this is a strong base for the performance and stability of the industry. Then when it comes to profitability, yes, this is seen as growing given the average return on equity of 15% as registered in 2023 vis-a-vis 19.8% for CRDB in particular, which shows strong performance of the industry. Then coming to the competitive environment, the landscape, we analyzed the industry using Porter's 5 forces model, where we looked at the threat of new entrants as moderate because of the regulatory requirements. Then for the power of buyers, we saw it as high due to the low switching costs, while as the rivalry among competitors, this is seen as intense. Why? Because of because the industry is dominated by basically 3 major players, that is CRDB, NMB, and NBC, whereby each of these cannot charge high prices for fear of losing market share.
Jumping into the valuation methodologies, we used 4 valuation methods: discounted cash flows, dividend discount method, and residual income and relative valuation. For the purpose of this presentation, we'll focus on the 3: dividend discount, residual income, and relative valuation. So for the dividend discount method, we made an assumption of this, backed by the strong dividend history of the bank as per the bank's financials. For the residual income method, the assumption was that there's sustainable residual income, and for the relative valuation, we used CRDB's peers in Tanzania, that's NBC and NMB Bank. We weighted the valuation methods and derived a weighted average price of 801 Tanzanian shillings. We also used the cost of equity to and to compute the cost of equity, we used the capital asset pricing method.
And for the cost of debt, we used the Bank of Tanzania CBR of 6%, adjusted for tax of 30%.
We cannot talk about CRDB Bank without talking about its share price performance, that registered a decline in 2019 from 135 Tanzanian shillings to 95 Tanzanian shillings. However, this is supported by also the drop of the Tanzanian shilling in the same period by 2.9%. This was also due to the high non-performing loans and the leadership changes. Financial analysis. In 2023, CRDB Bank registered a revenue mix of 54% of retail banking, 26% corporate banking, and 20% treasury. It also achieved a 5-year CAGR of 12.6%, which is projected to increase to 18.8% between 2024 to 2028. We cannot talk about CRDB Bank interest income without talking about its stage 3 credit impaired assets, because these form the basis of the non-performing loans and also increase on the provision of expected credit loss. In CRDB Bank, the corporate section registered the highest number of stage 3 credit impaired loans. When we go to the industry analysis, CRDB is a strong competitor, registering a 24.2% in return on equity and a 3.2% in return on assets, vis-a-vis its competitors like NMB Bank that registered at 25.9% in return on equity and 4.4% in return on assets, which means that these top banks, the major banks in the industry, are able to effectively invest shareholders' equity and assets to generate income in form of interest income. When we go to the net interest income, net interest margin trended downwards because of the geopolitical tendencies in the global economy and declined by 2.8% between 2019 to 2023. However, we forecast a recovery, though a slow recovery, by 0.7%, being cognizant of the inflationary tendencies in the country and in the global economy. Looking at the gross loans and assets, CRDB Bank's gross loans and assets increased steadily, though increased by a reducing margin, registering 32.8% in 2022 and 18.7% in 2023. We project a 4.4 year-on-year growth because of the decline in the customer deposits. Net performing loans declined from 5.73% to 2.45% in 2023, which shows that CRDB Bank is able to get back the loans that it gave to its customers. CRDB remains well capitalized, registering a 16.07 Tier 1 capital ratio and a 17.45% in capital adequacy ratio. Also, its loan-to-deposit ratio increased from 68.7% to 98.1%, meaning it is actually giving out most of its customer deposits in terms of loans. This is expected to increase to 110.5 in 2028, which may cause liquidity issues. Cost efficiency, CRDB Bank maintain cost efficiency through reducing its cost-to-income ratio from 72.6% to 51.5% due to the improvement in the net operating income, the loan performance, and the launch of the SIM banking and the USSD. This is expected to actually reduce further by 2028 by 31.2%. In conclusion, CRDB Bank is well positioned for sustainability due to its asset growth and retail banking.
We cannot complete the analysis of the industry without talking about the risks involved, and the major risks are the market risks such as cybersecurity threats and credit defaults, which affect the liquidity as well as the profitability of the industry. Other risks may include the regulatory risks as well as the climate-related risks and macroeconomic and geopolitical risks. These cannot scare you from investing in CRDB because there are other mitigants that the bank can implement to retaliate with your investment, such as emphasizing digital transformation, operational efficiency, introducing a robust cybersecurity framework, among others.
Furthermore, let's look at the environmental, social, and governance overview of the bank. The bank is committed to unlocking stakeholder value in terms of socio-economic development of Tanzania. We see that in 2023, CRDB Bank launched the Kijani Bond, which is the first green bond in East Africa, and the purpose of this bond was to increase sustainable funding. Furthermore, the bank was awarded a UN Green Climate Accreditation, of which the focus was climate adaptation for smallholder farmers in Tanzania. On the social aspect, 150 billion Tanzanian shillings for youth empowerment and healthcare. In 2024, the bank organized a marathon to support mothers and young mothers and women. And also, we see that the bank has a staff ratio of 46% female and 54% males.
In terms of governance, CRDB Bank was evaluated on 5 factors. The board of directors made up of 12 members, 9 NEDs and 3 independent non-executive directors. The top management is made up of 15 members, including the company secretary. Shareholder rights gives the shareholders the right to vote and attend AGM meetings. Transparency is where CRDB Bank publishes quarterly reports and audited annual reports. On to sustainability, CRDB Bank was evaluated on 4 Ps: prosperity, profit, people, planet, and partnerships. In conclusion, CRDB Bank is well positioned for growth and robust risk management. And with this expansion plan to Asia, Uganda, Zambia, and Comoros, we reiterate a strong buy recommendation at 801 with a 21% upside potential. Thank you so much.
Thank you, Team G. It's good to see an all-female team. I don't know what the guys at your campus are doing. I don't know where you left them. Yeah, and you're very smart. Thank you. Good to see. Thank you for the presentation. Well done. I think you did it in the allotted time. A few comments. One, who are the top 3 shareholders of CRDB Bank?
We have Danida Investments, we have NSSF, and unfortunately I've forgotten the third. Sorry.
Yeah, that's fine. Those are the top 2. Reason I ask is every time you're looking at a company potentially to invest in, a factor that is key is the top shareholders, because what potentially you're asking us or the group to do is to invest alongside Danish Investment Group and National Social Security Fund. So normally those controlling shareholders, they sort of drive the direction of the bank, and sometimes they carry with them benefits, and sometimes they carry with them detractors. Yeah, so for whatever reasons, I may not want to invest alongside that Danish Investment Group. I mean, there could be some sectors they're investing in, their corporate culture or policy I don't agree with, or they have a poor track record in delivering shareholder value in other markets where they operate. Have you seen any of the other investments they've made in the region or globally? Probably not. It's fine. Yeah, so that's what you need to look at. You need to sort of look at who is controlling this bank. Me, I'm coming in to buy probably less than 0.5% of this camp, someone who controls it. So all those nice facts you've presented, they drove those facts. Yeah, so good or bad, they are probably the ones who drove that, and they will drive some of those things in the future. Yeah, so that said, a general comment from that issue of the shareholders. This goes for Team C as well. I see you're comfortable. This comment goes for you as well. So you need to derive some of your own insights from the facts. Yeah. So I see you present everything the management wrote. I've not seen any of you question any of their facts or any of their assumptions. You know, you've taken them at face value. Yet those reports are written exactly to sway you in that direction. Yeah. So you have to be an investigative journalist and say, they are saying this, I don't think it will pan out. Yeah, okay? Yeah, that's a comment for you and for Team C.
Thank you so much.
Yeah, maybe I'll allow the others to first come in.
Just to comment, there's something I was told by a very able judge, Edgar. All of you are praising CRDB. Like, you are making it look like it's all good, and he just said it. Yeah, you need to try and have your own personal opinion, whether it's bad or good. It's okay, they have non-performing loans. Say it out loud. Yeah. It's not a bad thing, but it's business. Yeah. Otherwise, you guys have done a good job.
Thank you so much.
Yeah, just the last two on valuation. What you'd also want to show the historical valuation for this particular counter. You know, so where are we in their history? You might be saying today, you know, there's upside, blah, blah, blah. But you might find today the bank sits at the highest multiples it has ever been since it was listed in '96. You get it? Yeah, so you want to look at how is the valuation today relative to what it was a while back. Yeah, and on top of that, all the judges here, I think I said to you before, and the rest that, you know, this valuation business is a bit of an art. It's a mix of an art and a science. So what they are trying to tell you indirectly is that it's almost impossible to pinpoint a value on something as complicated as a business. So what you need to do as an analyst, you need to present a range of possible values. And when you present a range that has been stressed over various assumptions, and the price falls below the lowest of the range, I start to get convinced you're onto something. Yeah, but when you just point one number, based on your good assumptions, based on facts the management team gave you, based off reports they wrote, yeah, you can see where I'm going, right? Yeah, so you need a range of values. So show a range of values because you need to assume you're going to be wrong most of the time. It's impossible to say, you know, upside is 21.4%. It's not going to be 21.4. Yeah, you don't know. It could be 36%. It could be 5%. So what you need to convince us is that where the price, where the value sits today, it is below, you know, 5 possible values I've come up with, based off 5 different methods, based off 5 different assumptions, and so forth. Yeah. So that's what you, unless you had done that. Had you done that?
We stress test with the 10% Bank of Tanzania Treasury bond,
yeah,
and also 10-year and 20-year,
yeah,
to come up with the cost of equity and cost of debt. Sorry, cost of equity mainly. We just stressed to come up with a cost of equity, but not over the values or the prices.
Okay, that's fine. Thank you.
Thank you as well.
Just one comment from me. I think Steve had, in your previous presentation, advised you on selling propaganda, right? And you may have missed it this time around because you talked about the share price, right? But you focused on the period where their share price dropped. If you want to sell me this company, you need to be telling me this price is going up. You're missing. You should not be focusing on the period where the price dropped. Or you can say in this period the price dropped, but we are now at a point where the price is, you know, rising, and this would be a good entry point for you. You're trying to sell me you're trying to sell me this company, but if you focus on when the price dropped, you're not really selling it to me. So that's just my comment. Thanks.
Well done, teams. So as we conclude, we are going to do a quick tally of the scores, and we'll come back shortly after our judges, Dixon, and then we will announce what's coming up next.
So you could start by clapping for yourselves for braving today. First and foremost, for all the participants, you're all winners. This has been a learning experience for all of us, including the judges. I think we also had certain assumptions as we're coming in, but through the different discussions, we've been able to correct some of the wrong assumptions that we had. So this has been an opportunity for all of us to learn, to correct each other, okay, and leave this event as better professionals, okay? So I think based on all the discussions, based on what I've had, I believe I'm now a better professional when it comes to, research reports, when it comes to, how to structure your report, how to come up with your thesis, okay? So this has been good. It's been a really edifying event. And I would wish to thank all of you for your effort. I know it must have taken lots and lots of sleepless nights to actually put out your reports. I know you have schoolwork, you have term papers, assignments, you name it. So I know it takes a lot of effort for you to squeeze time to come up with such a complex undertaking that a research report is. So I think kudos to all of you for getting to this point. So I think as my earlier on, we're going to encourage a lot more teams to participate. I think in the next session, we want to see this whole field up. We'd want to have a lot more teams because ultimately what we're looking at doing is creating that pool of professionals. I mean, you're the future leaders in the capital markets tomorrow. I mean, probably in the next 5-10 years, you'll actually be sitting where I am, okay? So what we are doing is to prepare you for that role, okay? So we hope to see a lot more participation from a lot more universities and tertiary institutions, okay? So we're looking forward to a wider reach in terms of this particular event. I think we remain firmly committed to supporting the research challenge. I think we've partnered with CFA, Society of East Africa, for almost 10 years plus. We remain in this, just to reiterate that we shall provide the necessary support, we shall provide mentorship, we shall volunteer our time to ensure that this is a success and to ensure that we are creating that pools who are going to be the captains of industry in the next few years or so. So thank you for your participation. The mentors, faculty, thank you for your support. Your administrators, thank you for allowing you to be here. And we look forward to you participating in subsequent editions. I hope you've learned. You were challenged in the morning to network. I hope you've also met someone that you didn't know before you came in. You know, keep in touch. Our offices remain wide open. You have a question, please feel free to walk in. You need assistance. I mean, we remain, we keep an open door policy. So please don't be shy. And actually, I could see from there's some of you were presenting, you're not very shy. So please feel free to walk in. Any queries, any requests for assistance, we'll be more than willing to, you know, extend a hand of assistance where we can. I thank you. I wish you all the best, and I hope to engage with you, you know, in future. I think during last year's University Research Challenge, one of the participants actually ended up as an intern in our department at some point before she moved on to something else. So I hope we'll be able to meet in future, because you know, you're developing a skill, a unique skill, a skill that not all of us have. So I hope we'll be able to interact, but feel free to reach out at any point, and we'll be more than willing to provide the necessary support. Ruth and your team, thank you very much for, you know, this effort. I know there are so many moving parts, the logistical aspects of it, but you know, you've been able to pull it off. So thank you, Terence, Norbert. I think they've really been treating on this, trying to give this the hype and the coverage that it deserves. Judges, thank you as well. I think you've had very, very useful comments. You've made you know, very useful remarks to the teams. You've encouraged them, and you know, I hope that you'll be able to volunteer your time next time. And you know, we look forward to subsequent editions, and good evening.
Thank you very much, Dixon, for those closing remarks. I would like to appreciate each one of you for putting your best foot forward. I know it's been a hectic 5 months of very hard work amidst your classes and exams. Those breaks that you had, some of you actually never went for Christmas break. So we really don't take that for granted. And we hope that you'll find this experience very rewarding. As Dixon already mentioned, there are a lot of opportunities that await you out there. So I would encourage you to start, you know, working or thinking around your career. Think about what you want to have in your CV. This is already an experience that you'd proudly have in your CV. We get usually a lot of calls from our partners and stakeholders requesting for CVs of past Research Challenge participants. So just be on standby, and we hope and pray for the very best for you guys. I want to appreciate the who have been extremely active today. We appreciate your feedback and the mentorship that you have offered to the teams. We thank you so much for spending the whole day with us amidst your very busy schedules. We don't take that for granted. I also want to appreciate the team from CMA, Terence and the team. Thank you so much. They've decided to work from here today, and we are grateful that you participated and took part in this event. I want to appreciate faculty advisors. I don't know if they were introduced earlier. You can just wave. Faculty advisors from the respective universities, if you're here. Thank you so much for accompanying your teams and for the support. Do we have any industry mentors? Yes. So Derek there has been a participant of the research, I think the last 2 years, if I'm not mistaken, and he's supported the research challenge. He's so passionate about it, and he even volunteered before he became a mentor this time around. So we look forward to some of you coming forward with the experience you've got today. Come and support the next cohort of the participants, mentor them to, and I believe Derek will tell us later maybe if his team has won. We would be very happy to hear about that journey, but I know he's very passionate about it. And maybe later, Derek can share his testimony about how, maybe even now, Derek, if you don't mind, he can tell us about how this journey impacted him. Welcome, Derek.
All right, thank you so much. I take this honor to stand in front of you to give a testimony in that case. Yeah, so I'm Derek Manshimwe, and currently I'm a research analyst at Crescent Capital. And had it not been the research challenge, I think I would not be there, maybe. I participated in the research challenge in 2023, and I won the challenge. So I think I deserve it. Yeah, and from that experience, I can tell you that even in my academics, it helped me a lot. I remember the subsequent course units, I passed them because that's what I was doing. Of course, you burn all those nights reading that annual report, and this time you are given Tanzania, which I think most of us here may have not reached in Tanzania, but you have been analyzing the macros, everything in Tanzania, the banking sector and everything, and that's what it means by participating in this. And from that's when I had to get my first professional job at Crescent Capital, and up to now I have I'm still in the shoes there, yeah, as a research analyst, from an intern up to where I am as a research analyst. So me, when I see all of us here, I feel so proud because it is very important. And trust me, when you put in that effort, you are rewarded. And even if you have not won, I think Dixon said, it is a win already. But the moment you reach at the presentation stage, then you have won. It is a very big win. So I encourage all of us, and when an opportunity comes like this, always support or maybe take part. It is very important. Thank you so much, Ruth. For Ruth, I don't know for sure. It is to, I don't know what I can say, but it is. I'm so happy to be part of this challenge.
Thank you, Derek. I don't need to add anything to that testimony, and I hope we'll listen to more testimonies in the next research challenge. I also want to take this opportunity to appreciate one of our charter holders, Arnold, who also supported us as a grader, and I would like him to come just to share a bit of insights around what he saw and read on your reports. Arnold, please, you're welcome.
Yes, good evening once again. Given the time, I mean, it's about 5:30. I'm going to be brief because naturally people's attention spans at this point in the day are ridiculously unreliable. So maybe just to be very, very brief, given the circumstances, you could see clearly that your students, many of you are doing this for the first time, or you're getting introduced to this kind of thing. It's a unique skill set, very complicated, and it takes time to build robust acumen in some of these aspects. So I was a bit harsh when I was judging you, but given the fact that I've had time to synthesize what each and every one of you has done, I feel I was a bit harsh on that side, and I take that into context. So next time I'm doing something, perhaps I'll be more lenient. But my harshness is because I aspire for you guys to sharpen, whatever you're putting out there. I want you guys to be extremely competitive. I want you guys to, do something that is above and, beyond the regular. And that's why, again, I don't want to go into comments because the judges did a good job. But many of my comments, as the presentations progressed, I found a lot of things that I thought perhaps would give you a competitive edge. And maybe just a key takeaway before I leave is I would encourage you guys to benchmark yourselves against the work that is being done in other markets, because you can clearly see that the depth and the lengths that other participants or other competitors in the other markets go to is quite astounding. You'll see a lot of ways that you can patch up, especially for those teams that have not, but even those that have gone through. I mean, this is not the end of the process. You're still, going up the ladder, and you're still competing against the rest. So try and benchmark yourselves against what's out there, see what has been done in previous instances, and see where, you can make your presentations and your research proposals more compelling. So the good thing is all of you here are new to this thing, so I think there's a lot of room to, there's a lot of progress that we have to, that we need to make before we can catch up. I summarize with that. Thank you.
Thank you so much, Arnold. And I think the speeches can stop here. As Arnold already said, the attention span might be going down and down. We have listened and spoken. I just wanted to highlight the teams that participated today in their respective capacities as universities, not as the teams that were allocated or the names. We had Team A was Makerere University, Team A. Team B was Makerere University, Team B. Team C was Makerere University Business School, Team A. Team D was Makerere University Business School, Team B. Team E was Ndeje University, Team A. Team F, Uganda Management Institute, Team C. And Team G was Uganda Management Institute, Team E. So in total, we had 7 teams participating in today's competition. And as mentioned earlier, we have narrowed down to the winning team. And I think I wanted Arnold to come back. He's, I think, the most neutral person here. We can agree. He only graded. So I would like Arnold to do that to us, who the winner is. And then after that, I would request the judges to just step up, or I think around here, so we can have a photography moment with the winning teams. Thereafter, we'll have certificates for the winning team and every participant. The winning teams also have awards and a check that will be cashed to the team. We'll contact you later after here on how you want to receive the cash. It's up to you how you want to spend it. We do not give it with conditions, but of course we encourage you to spend it wisely. So that is the order of the next session. Thank you.
All right. Yes. So like go with the same trend, not to keep you here longer than you want to be. I'll announce the winning team. They've been going by the letter G, and they are none other than a team from. You guys, you're not guessing. There's a lot of anticipation. There's a lot of anticipation in your faces. But that's good. Anyway, the team G is UMI team E.
free. Hug the judges if you must. Please, we are ready for the photo shoot. I can feel the excitement. Congratulations. Yeah. Please join. Do we have the faculty advisors or industry mentors here? All right, okay. So we'll just give you your certificates. Feel free to hand them over to your industry mentor and faculty advisor. Oh. This is which one is
One and the winner.
Yeah, those are tears of joy. All right, so I think I'll just, I don't know where I should stand. I wanted to pass this over. Maybe you can go to the other side so that we can just pass them over from here and then you can receive from there. We have Nalule Letitia. Congratulations. We have Nshuti Kabateran Justin. Then we have Namboira Vitaminsi. These are for your industry mentors. So we have these awards. This will go to your university. This one to the mentors. So we have 5 awards. Unfortunately, they are not shareable with the first runner-up. I guess we will keep the remaining 2. Yes, so we have, yes, these ones. So we have this, member of the and then for the university. And then the bigger one is for the university, and then each one of you gets one. Yes. We also have a check. number so we can cut on time. We have UMI Team C. Oh, congratulations. We have MOBS Team A. We also have MOBS Team B. MOOC Team B. And MOBS Team B. MOOC Team B. MOOC Team B. And MOOC Team A. MOOC Team A and MOOC Team B. Team A. And DJ University Team A. So this brings us to the conclusion of today's occasion. Once again, thank you everyone for your participation and congratulations to the winners. And as mentioned earlier, all of us are winners.